Hello, everybody, and welcome to the third edition of the Georgian International Insurance Conference. We are here in our XPRIMM studios in Bucharest and happy to see you again. Of course, we would be more happy to see you in Tbilisi, but this is life. And this year we have to just be thankful that we can meet each other like this. Together with me are my colleagues who will also contribute to this conference. And I am Daniela GHETU. I will be pleased to walk you through the main points of the meeting today and uh, present you all our speakers and special guests. But first is first, I would like to introduce you to Mr. Sergiu COSTACHE. He's president of our group of companies, and I pass to him the pleasure to really welcome you today.
Gamarjoba Sakartvelo. Hello, Georgia. I prepare something for you. You will tell me after if it's okay. Moharuli var Romkvlav Gnakav. I'm pleased to see you again. I hope I said this. It's the third time we are meeting you, and I am very happy to see that we have prepared a very interesting program for you. First of all, I want to thank to our partners for their support. As strategic partner, we have VIG, Vienna Insurance Group, and New Vision Insurance. As main partner, we have Euroins, the group. As partners, we have RD Insurance, SCORE, MyCE Insurance Brokers, BB Insurance, IRAO, GPIH, VIG, IMEDI-L, and Global Benefits. Last but not least, as a warm thank to International and Ibero-American Foundation for Administration and Public Policies, a foundation that has constantly supported the organization of this conference. I could say it's almost a tradition. And of course, the Insurance State Supervisory Authority of Georgia, and personally to Mr. Devi ONOPRISHVILI, is chairman, for the constant support and involvement in all the projects regarding the development and the promoting of the Georgian insurance market, and of course of Georgia as country image in the whole world. Thank you all for joining us today. I will pass the floor back to Daniela, and she will give you additional details, and I will come back with questions for our guests. Daniela.
Thank you. So today we will have a rather long day, I could say, but I hope a very interesting one. Two parts of conference. In the first one, we will start from the Georgian market and step by step enlarging the picture to see how the entire region fared last year during these challenging times. And we will end with a special presentation which reunites two main features, the hard topic of technological advance and of mitigating natural hazard risks. And in the second part, we will focus on health insurance, a topic which is quite really important for your market. And we will end with, again, a guest speaker who will touch this link, very important link of promoting health insurance, but not only, other business lines too, towards the new generation of consumers and their expectations and needs. But until this time, I have one more organizational thing to show you. In fact, it's about the opportunity that you have to ask questions to our guests and speakers. And to enable you to do this, we have here with me Mihaela Kirku, our colleagues. She's Business Development Director with XPRIMM. But today she will be so kind and eager to help you to communicate with our speakers, and we'll take care to convey them all the questions. Mihaela, what should our attendees do in order to ask questions?
First of all, hello and welcome on my behalf to the third edition of Georgian International Insurance Conference. To answer your questions, Daniela, is very simple. Just put your question on the chat from the Zoom or in the YouTube chat form, and I will send it to our speakers after each presentation or during the panel as instructed by Daniela. We are waiting for your questions.
Well, we are strongly encouraging you to ask questions, to be active, and to help us have a very sparkling session of discussions. But first is first, how did the Georgian market cope with the special situation in 2020? What were the main challenges? How was the environment of the market with which insurers have to deal? All these things, and especially what are we expecting from the future in this market, will come as precious information from Mr. David ONOPRISHVILI, chairman of the Georgian Insurance Supervision State Service. As usual, very informative and keen to provide as much information as possible. David, the floor is yours.
Thank you, Daniela. I would like to greet everybody. Today we have third Georgian International Insurance Conference. I'm glad that we are together again. And I also wish that I could meet you personally and host you here in Tbilisi, definitely, but unfortunately, current situation not allows us this year, and I hope it's the last year. And balance, which is now twice happened this way, and only one in person. So I think next year we will make a tie, and we will have the conference in Tbilisi, in our capital, Tbilisi, Georgia. Let me share my presentation to you. Here is our presentation. One second. So before I touch the issues related to insurance itself, I would like to just make a short overview related to general economic indicators of Georgia. Here you can see recent economic growth, recent years. It was consecutive 3 years was growth up to 5%. But like all countries in the world, 2020 was a challenging year for all the world and for Georgia as well. And it was significantly affected our economy by lockdowns and all related issues. But despite this, I must state that you can see on the second chart here that Georgian economic growth forecast on 2026 by IMF shows that still Georgia will be one of the leaders in the region. But still today, situation getting partially better, but still I think whole 2021 still will be under the pressure of pandemic situation in the region and in the world. Here you can see the GDP by sectors, and here mainly it looks like they're almost same, but I would like to state that share of this hospital sector, which is here shows a HoReCa 3.1%, and it was 4.6%, and also financial sector also partially decreased. And it's explainable. I don't touch much this issue. And here you can see details from where we received the most serious pressure to the economy. You can see the revenue from international tourism dropped by 83%. It was a serious problem for Georgian economy. And here is just numbers of visitors also dropped almost same percentage. It's from 9 million dropped to 1.5 or even less. Here is a foreign direct investments. Foreign direct investments in 2020 was one of the lowest. You can see here decade, but I can state that it's for 2 decades. Even we don't remember when last time was a so low figure. But you can see on the right side global FDI inflows. And you can see the same trend is here as well for globally. So it's explainable as well that all countries are having a problem with foreign investments in this pandemic year. Next, you can see the World Bank Easy of Doing Business, which is World Bank publishing every year. And here, recent maybe 5-10 years, Georgia in the first 10 among first 10 countries, and in very nice company, by the way. You can see number 1 New Zealand, Singapore, China, and Georgia after United States, which is number 6 this time. Georgia is the number 7, then UK, Norway, and Sweden. And of course, it's good definitely for investors, but looks like not for pandemic year when everybody stops investments and the countries having the financial and economic problems. I would like just also few minutes to devote just few minutes how our institution, State Supervision Service of Georgia, Insurance State Supervision Service of Georgia was created under the Georgian law on insurance in 1997. It was 10 years as an independent authority accountable to the government. Then it was changed from 2013. It was under the umbrella of National Bank of Georgia. And again, from 2013, it's again returned under the government of Georgia, and it's as a regulator. And since 2018, the institution is financed by supervisory fee from insurance industry, like in many countries. I must state that this change is actually I must state, because I was a part of the changes, myself was leading the parliamentary chairman for the committee in 97 and then again 2013. And during these times, we definitely see that much more effectiveness and real supervision was usually taken when it was independent, then under the umbrella of National Bank. So it's a Georgian experience, and I wanted to share with you. So here is just what we are doing, like other regulators and supervision institutions. So we are contributing financial stability, the insurance market, protecting consumer rights, we pay much more attention to this and financial education in recent last 2 years, and other functions which we have, like other institutions like us in the world. So here is a main legal acts, is a civil code, loan insurance, and loan non-state pension insurance, and other compulsory insurance laws. A very important event happened in 2014 when the Georgian signed this European Union Association Agreement, and it was stated in different areas of the economy, different deadlines, and for the insurance sector, here as you can see several directions we should be committed by this agreement to start to work and be ready during the association period to implement. And then number one is here is a directive 2009, year of 2009, European Commission of the European Parliament and the Council, that we are going to implement Solvency II, which already started this implementation in Western countries, and for us is a challenge, and I touch this issue a little bit later. And other directives we should also take into account in coming years. This is exactly the point which I wanted to mention, that regarding Solvency II, that European Union assisting Georgia, and it was funded by European Union project, and we choose our partners during this transition time, Directorate General for Insurance and Pension Funds of the Kingdom of Spain. And this is 2 years project, and overall objective of the project to fulfill these obligations of this directive and to strengthen our institutional human resources. And important issue is elaborate the legal framework, of course, to implement Solvency II standards, because we are not having anything like that today, and it's very complicated, very challenging. Everybody knows this. So we are working really hard, and I think we will touch these issues next time when we really have some results of this direction. So here is a project component, but because I have limited time, you have this presentation, you can really find out details, and if you need more details, definitely we can share with you. So here is started now our sector, insurance market and supervision system. And you can see that with the expectation of market slowdown, we have made the decision to postpone the increase of minimum capital requirements. Last year, companies asked government and asking us to, because of COVID situation and several other problems, and we agreed and we told the government that I think this was possible because we calculating all risks, and it really was possible to postpone for the 1 year. One positive maybe what we must state that during this COVID year 2020, one more company was established and joined to the market, and now we have, you can see here is now we have 18 companies at the market. New Vision company joined the other 17 companies. So the market structure, you can see the health insurance still here is a medical health insurance is over 40% in overall portfolio of the insurance, but is the most loss bearing as well this time. And motor and property insurance come next, almost in similar capacities. And you can see over year dynamics over the years, how it's increasing, major directions. And I think these lines could be higher figures, but we know the situation with COVID and opportunities in this business we have in Georgia. I think it's coming years we definitely see better developments and results. Next, here is market structure. One moment. I think we missed this slide. This is dynamics of growth of written premium. So it's you can see 20 years of our market performance, and you can see all recent years it's a growth, and even 2020 during the pandemic years we can see the market slightly, but still was growth. Written premium was higher than the previous 2019 year. Yes, we see this. Here is a related. You can see this is a developments on the reinsurance. Follows, of course, the general trend, growing trend of the market, and you can see the reinsurance premiums by year growing, and as a part of GVP, you can see it's getting higher as well as a part of the GVP, how it looks the reinsurance itself. Here is we can see paid claims situation and incurred claims, gross versus net amount. I would like to state here is also we mentioned that the sharp increase here is paid amounts of in 2019 was related to large claims incurred on fronting policy situation. Here is our sector as the insurance sector shares about 1.35% of total GDP. Of course, it's growing, but it's still, I think, low because statistics shows that Western countries have at least 5, 6, 7, even higher percentage, approximately. So, and here is a room, and of course, we really do our best from our side, in general, that the share of the GDP of the insurance sector will be much higher in coming years. Here is as informations, market penetration in trans insurance increase. Here is a motor casco figures also. Definitely it's decreased a certain way because of pandemic situation. You can see here the balance sheet equity of insurance per year and supervisory capital, which is growing. And the equity is growing, and capital as well is growing, and generally we are balancing definitely as a supervisor here situation, and these requirements are so far is enough, this capital in order to perform, and all risks are to cover all risks what might come in certain situations. Here is a development of supervisory capital in relation to solvency margin. And you can see this increase now up to 190%. So situation is getting better. And on the right side, solvency and supervisory capital dynamics. And here also you see the supervisory capital increase. And here is the solvency margin. So figures definitely shows the good trends in general, despite the difficult year. Next, here we see here the share of supervisory capital in total equity of the insurers, and share of supervisory capital percentage of equity on the right side. Here is an annual profit dynamics, and profit is companies' profits also growing. And we should state here the 2020 the profit is higher than 2019, and definitely needs explanation that it was due to temporarily decreased mobility of healthcare insured persons and devaluation of Georgian currency, Georgian lari to US dollar and euro, in which main liquid assets of the insurers are dominated. So it was quite a significant share of this growth. In this year, we did some new approaches we established for efficient supervision of insurance brokers. And here is we are stating what we did actually. Obligation of having own capital, guarantee fund at any stage of the intermediary activities, requirement of having a professional indemnity insurance, requirement to submit annually audit financial statements, which was not available 2 years ago, eligibility criteria for the directors and founders, etc. So we are now in line, trying to be in line as requirements of the European standards in this insurance sector, I mean, directly related to brokers. And next, here is information, certain statistics and figures related to brokers. So here is a very small share of brokers, 6.7%. And participation in reinsurance operations. Here is a bit higher, 19%. And you can see this brokerage activity also increasing by 24% in insurance operations and 46% in increase in reinsurance operations. So, and finally, what I would like to mention what the planned, in general, of course, planned further activities for this year and next year. So we are working quite hard drafting a new law on insurance based on Solvency II directives, then to be submitted to Parliament, which hopefully will be next year, and then it should be passed by Parliament. Gradual practical implementation of risk-based supervision, which is based on Solvency is based on the risk-based supervision as a part of the Solvency II regulatory framework, and starting with the governance requirements. We will introduce new web portal for reporting based on XBRL taxonomies and relative DPMs. more communications with local and international partner institutions. And we are working to introduce the life insurance, which generally not available in Georgia in the full scale. Introduction of new regulations supporting forms and guidelines in accordance with the revised AML legislation, and supporting the market in the preparation for the introduction of IFRS 17 and IFRS 9. So I think it's a general overview. Of course, we had much more information to provide, but I think 25-30 minutes, you get a general information what we provide at this stage, and much more, of course, available now at our website. We are almost sharing all majority of the almost all information what is available in the insurance sector, what is allows us Georgian legislation. Thank you very much.
Thank you also very much, David. Very informative indeed. I think we are entering the questions territory. And if I'm not wrong, I think Sergiu has one already prepared for you.
Oh, one second, I should.
David, I already received 3 questions for you.
Yes, yes.
I will start with the second one. What expectation do you have for 2021? Because you discussing before, you told me 2020 it was a hard year, very very difficult, and we see this on the situation of the market. What do you expect for 2021 as a supervisory authority and regarding the market?
Regarding the market, as we all understand that Georgia is not an exception. The pandemic situation is continuing in the world and in Georgia. For us, and I think we are talking with the companies maybe every day with different ones, and we know the situation is still not much better. So we, at least we should keep moving, not to worsen general kind of say statistics or their performance. Should not be worse than we tried not to be worse than 2020, because inertia it works, and in certain area of the economy and finances, maybe for different sectors could be even worse this year than 2020. But we still hope. We have figures of the first quarter of 2021, which shows insurance results has slightly decreased even in comparison first quarter of 2020 from 41.5 to 41. It's a minimal decrease. And when we had and this happened when we had a really massive lockdown these recent months. And the net profit was 16.6 million in the first quarter of 2020, and now in 2021 we have 13.5. So actually we are the pace is the same, and we do our best. That this year was also not worse than 2020, and we really trying to create situation. Then 2022 was certain kind of breakthrough after this consecutive 2 years slow down, despite market performed positively and negatively compared to previous years. As a supervisory point of view, some new steps. I think we are not trying to do much any new steps. Minimum capital looks like will be increased. So far, the situation is like this. And also we are working from now new third-party liability laws like medical doctors, third-party liability, and construction, etc. And of course, life insurance together with the World Bank, which assists much to us in this job.
Second question, because you already answered to the third one. Second question, it's last year a lot of changes in the customer preferences have been seen. New mobility preferences, usage-based products, demands, and so on. People are get more and more informed, and clients are more and more. They are expecting more from the insurance company. It's the Georgian market prepare for those changes bring by the digitalization and the COVID crisis?
Yes, I actually would like to mention that even last year in March, we issued special decrees that we asked the companies to use as much as possible digital options for their customers. And anyway, the future is towards the digitalization, and without such approaches, I think not much company can be sustained in the market. Therefore, we have several, at least 4, 5, 6 companies who are quite have a very good achievement regarding this direction, and really pay much attention on these issues. And there are, of course, some companies not much attention regarding improving technically this opportunity. And we definitely think here to make some intervention certain way, I mean, to maybe set certain requirements, not right away, but giving a time period, and requesting certain requirements to be upgraded their systems in order the consumers will be fully satisfied with the products and timely responded, and not to be disputed much after the contracts.
Thank you, David. Of course, this is an ongoing process, and adaptation is the issue of the day, every day. But at this point, I think Mihaela has something also.
Yes, thank you, Daniela. 2 of our participants have the same question, interest in one topic, mainly the MTPL system. Can you tell us what is the status of the implementation of the MTPL system, and when do you think that this will be fully functional?
Yes, we have actually partially implemented so far. It was 3 years, approximately 3 years ago, only for foreign cars crossing the Georgian border, like we call as a border MTPL. They mandatory should pay for the TPL, acquire that. But for the general, for the population, this law already elaborated. It's already was discussed in the government, and it's already in the parliament, where the 2019 was discussion started at the committees. You know, it's very sensitive in general towards the population, this law. And this discussion is still in the parliament. So I cannot say much, but I hope that it will be passed this year. And then I think implementation will start from 2022.
Thank you. Thank you.
So we just need a little bit more patience. Thank you very much, David. I see that there are no other questions for the time being, but we will meet again in the panel of discussions. So there will be future opportunities for you all to ask something else. I just take the liberty to allow 2 minutes for presenting you our latest editorial premiere, which is directly related to the Georgian insurance market. If you are accessing, it's very easy, in fact, to find it. Just access the xprimm.com website. I'm sure you all know it already very well. And on its first page, you will find the first, in fact, or considering that we had a previous attempt some decade ago, the latest issue of the insurance profile of Georgia. In my opinion, well, not completely unbiased, probably. It's a good publication. You will find in it lots of interesting things besides statistical data, which are covering not only the last year, but also a timeline of at least 5 years before, so that you have something, an ensemble image of the market evolution, not only starting with 2020, which is quite an atypical year. You have also lots of interviews with representatives of the most important insurance in the market. They are explaining both about their company's performances and the market performances, their expectations, perspectives, etc., etc. The report is available, of course, online for free for you as guests in our conference. There is a special feature you will receive on email after the conference, link to the page from where you can actually download it in PDF format, so to study it on your desktop whenever you want it. Otherwise, it is free of charge and available for everybody. I hope you will like it. And that being said, I will go to our next point of the agenda. We have started by looking directly at the Georgian market. Now we, as I said, we will have a little bit broader look, because we will look at it from the perspective of a regional player. And we will hear from Mr. Gerhard LAHNER, member of the executive board for the Vienna Insurance Group, a group which is probably, or not probably, surely the insurance group with the largest footprint in the Central and Eastern Europe. And so he can see Georgia not only by itself and the strategy that VIG is preparing for it, but also in the regional context. Gerhard, the floor is yours. Welcome. We are listening.
Thank you, Daniela. Hello to everybody from Vienna. Let me just start my presentation with saying that, of course, the year 2020, we are all freshly in mind with the impression about the pandemic development. Nevertheless, let me draw a little bit also your focus on the basic principle of the long-term industry of the insurance business. If we're talking about the VIG, so let me welcome you in the VIG world. VIG world is, as Daniela mentioned, Central and Eastern Europe. We are the leading insurance group in Central and Eastern Europe, and during the next slides, I will explain you a little bit more how we interpret that. At the beginning, a few facts and figures. We are represented through around 50 insurance group companies in roughly 30 countries, and we serve more than 22 million customers. About our financial strengths, for those of you who are interested in capital markets, we are rated with an A+ rating from Standard & Poor's, and we are listed on the Austrian and the Czech stock exchange. We are listed since the year 1994, and we are not only among the largest companies on the stock exchanges, we are the best rated company in the Austrian ATX index, and we are among the largest shareholders of the Vienna Stock Exchange, including the Prague Stock Exchange. And one of our colleagues in the Austrian ATX is, of course, Erste Group, which is the largest retail bank in Central and Eastern Europe. And it's not only the only thing that we have listed on the, we are in a strategic partnership with Erste Group throughout the next roughly 10 years. And we are very proud that we can count on 25,000 very good employees. When it comes to capital markets, let me shortly, because this is important to understand our philosophy about Central and Eastern Europe, come to our ownership structure, which is when I spoke about the stock exchange, we have a free float of 28% roughly, and we have a strong main shareholding of one insurance institution which owns 72%, and it is there for a long time. I will come to that later on, and it definitely has a long-term vision for the CEE region. Let me also point my fingers to the dividend policy of our group. We have a payout ratio of 30 to 50% of our profit. And as we are going to have our General Assembly right away tomorrow, there is the suggestion to pay out 0.75 euro per share as a kind of dividend. Why is the payout ratio so important? It should also show you that a minimum of 50% of our profit we are going to reinvest into our growth and support strategy in Central and Eastern Europe. Central and Eastern Europe, and this is the kind of map that shows you our footprint. In light yellow, you see the markets where we are present with representations or via reinsurance business. All the other quite powerful colors of red, orange, light blue, and yellow, these are the main markets where we are having insurance companies, and we are represented in these countries. We cluster them in number ones in up to top 5 and up to top 10 numbers. And as you can see, the Georgian market being one of the spearheads of our expansion. Of course, you see also that we entered the Georgian market in the year 2005 already. Nevertheless, let me go back to the year 1824, when in Austria, VIG was founded at that time as a local insurance company, and our roots go back now for nearly 200 years. What I usually tell to people that are very excited about nowadays development of digital transformation and startups, I usually tell them that I very much appreciate their efforts. I very much wish them good luck, but VIG already had nearly 200 years of chances of failure. VIG survived 2 world wars. VIG survived, and we can say that now very proudly, already the year 2020, which was a pandemic year, with a financial stability being represented in a solvency ratio above 200%. When I go to the shorter history, which means the last 30 years, you see here that immediately after the fall of the Iron Curtain in '89, VIG expanded, and we first did our minority participation in, at that time, a Czechoslovakian founded insurance company that is at the moment two companies, one in Czech Republic, one in Slovakia, both of them representing roughly 30% of the respective markets. You see here our further expansion through Hungary, Poland. I will skip a few. There is definitely, until the year 2019, a quite sound growth strategy, but, and this is very important for us and also for you to know, our home market is CEE. Compared to other players, we are not going for the highest yield that you can get as a return when you would go to the Asian market or to the US market, which all is very exciting, very fancy, but we are at home in CEE, and this is the place where we want to be. This is the place where we see the vision materializing in protecting what matters, not only as a value for material things like houses and cars, etc., but also to be on the growth path of wealth in the CEE region. How do we do that? We follow more or less 4 basic principles, and let me shortly explain them to you. We are following a principle of local entrepreneurship. We think that insurance business is something that is very close to the client. So we trust that people also, for example, in Georgia, know best what are the needs for the clients. So we do not believe that from Vienna, we know what we should do for Georgia. We think that local people much better know what is the surrounding, what is best for the society to be in return a partner for growth in wealth. We follow a multi-brand strategy, which you see later on, or you probably know if you are doing business in Georgia, that we are represented by GPI and Irakli, which are 2 companies. And as I mentioned, we have 50 companies in the group. And if you see that, more or less, just very little companies have by coincidence the same name. What is important for us is that all of them have the same surname, which is Vienna Insurance Group. We follow an approach in sales, in distribution, which shall go close to the clients as well. So that means we do not restrict ourselves to certain distribution channels only, but we say the way how the clients want to be served is right the way where we want to be with our clients. What we follow, and this you can see in our financial strengths, is we follow a relatively open approach in sales, and we follow very strict approach when it comes to investments and reinsurance policies. We have a very strict central steering of the guidelines of investment and reinsurance. Nevertheless, the execution stays local, as was mentioned in the local entrepreneurship. What is on our agenda, what was on our agenda the last few years is that we want to do 2 things mainly. We want to optimize the business that we are running for the time being, because we are a relatively big player in the respective markets. As I mentioned, the Czech Republic, Slovakia, Austria, also in Georgia, we have a respective market share and we respect the clients that we are serving. Nevertheless, we also focus on ensuring the future viability. As mentioned prior, we're focusing on digitalization and new ways how to serve the customer. Those of you who are following the VIG probably might have recognized that we are pushing digitalization in a very local way. We say that we have actually research centers in all of the countries where we are active. We are spending about 50 million euro on a yearly budget for the digitalization, but in a decentralized way. So we do not only, but as well cooperate with Silicon Valley. We think that a digital solution always needs to serve and fit the local needs. Our sustainability strategy you can find not only on our webpage, but it's deeply implemented in our heart. It's not only that I'm father of two small kids that usually are asking those questions: Dad, where does the world go? Are we safe? Are we going to have enough food, enough place for the future? Will the climate change go on? Will it speed up? Or is there anything that we can do about it? And in this respect, I can inform you that a few weeks ago, VIG issued an ESG bond voluming 500 million euro, which we're going to invest into ESG projects in the region. Now coming to Georgia. I have already mentioned GPI and IRAO, and I have mentioned that these are the first names, and you find below each of our insurance brands the surname Vienna Insurance Group. I should not talk too much about the market, as David already put you in the picture, but definitely we believe very much in the market. We are strongly capitalized, we have a good regulatory record, and we have a very flexible group support in a way of profound experiences that we can share within the group. As for any country in VIG, there is a direct responsibility on the holding board, one board member responsible for the market. I can tell you that I'm responsible and very proudly responsible for the Georgian market in this respect. What our expectations are on the Georgian market, and I can tell you that we very much feel the support of the supervisory authorities, and thank you very much for that, because we support anything that goes into the direction of unifying with the European standards of doing insurance business. We very much support the privatization of MTPL, not only, but life insurance will play a very important role in creating value and wealth for the society of Georgia, and we very much support that. We very much support any kind of action giving chance for fair play and developing the market together. In this respect, very big thank you to the XPRIMM team for organizing conferences like this, even given the circumstances that are quite not so easy now. Thank you very much to the whole team. We have a very stable strategy for Georgia. As I have mentioned, we think that the Georgian market has a very great future. We came to stay. This is our home market. This is what we want to grow and where we want to grow. We think that the growth strategy for the market, which is supported by healthy profitability, is a long-term and sustainable development, and we want to be very important and leading part in this, and we offer our help in this respect to all the authorities. And yes, we want to be an employer where people feel comfortable, where people want to do something, they want to return something to the society, and they want to do something sustainable. So far, this was my and our view on the CEE market, especially focusing on Georgia. And believe me, with nearly 200 years of experience, I can tell you that I fully share the opinion of David, that if it's 1 year or 2 years is important for the time being. Nevertheless, in the long run, we will see that we will all be part of a successful and very stable and well-developed Georgian insurance market. Thank you very much for listening in, and I'm happy to receive your questions.
Well, in fact, you will receive them immediately, because I see Mihaela signaling that she already has some.
First of all, thank you very much for your appreciations regarding our conferences. We couldn't do this without your support. And your first questions comes from Dimitri, who asks, compared to other markets in VIG portfolio, what trends do you expect for 2021-2022?
Compared to others is quite difficult to say because we have so huge portfolio. We think that the trend will be similar to what has been mentioned already. So we see the year 2021 still as a quite not easy trend upwards. Nevertheless, I think that the sound development will continue. So we will not see such a big deterioration as we have seen last years, and we will see a recovery for next year.
Another question coming from Steve Callum. Can you point some innovative solutions implemented by VIG companies in Georgia and in the region during the pandemic time?
Yeah. We definitely did a lot of different things, especially in the communication with the clients. So what we try to do is we try to focus, especially when it comes to health insurance, to organizing a communication between our clients and the doctors or hospitals, even going as far to arrange appointments for people that are in the need of some care.
Thank you very much. Coming back to Daniela now.
Well, in fact, I have an additional questions. I'm taking a little bit advantage of my position here with the open mic. MTPL, as soon expected to be introduced in the mandatory form in Georgia, is known as a quite challenging line of business. It is very productive, but is also always carrying some issues, especially in what the profitability is concerned. If you would think to what you have seen in all the markets, well, VIG is active in the CE, what would be the biggest, most important don't do that you would emphasize for the local insurance?
Don't is, of course, there are a lot of don'ts, as you have mentioned, Daniela, rightfully. It's one of the most challenging lines of business that we know. Nevertheless, I think that a reasonable approach with a mindset that we want to support the society in getting a right price for insurance is something that I would be asking our, let's say, players on the market that should be some basic understanding. We have seen certain very successful privatizations or implementations of MTPL, as I have mentioned. Myself, I spent over 12 years in the Czech Republic, where MTPL is profitable at a reasonable level for long-term and sustainable time since the privatization at that time in the beginning of the 2000s. And I think that it is important to respectfully go into a kind of introduction so that the long-term trends can be followed and found rightfully for the Georgian market and not just copy international let's say triangles or developments, but really focus on what is the right price for the Georgian market.
Thank you very much. I'm sure that it will be not really easy from the very beginning, but in the end, there is always a solution to that. Thank you very much, Gerhard. We will go now to our next speaker, and once again broaden a little bit the picture to see how the entire region has fared last year. And to do this, we have invited Mrs. Ekaterina Tolstova. She is senior financial analyst with S&P Global. Of course, S&P is not needing any kind of introduction for anybody. So I will just say, Ekaterina, the floor is yours.
Thanks a lot, Daniela. First of all, I would like to thank you for inviting for this event, and I will also share the presentation around our view. And here I will focus on a number of countries which I wanted to touch upon. So just give me a second. Let me know if you see the screen so that I can start. Yeah. Generally, it was already said by both David and Gerhard that the situation of the COVID was quite impactful for the economy in different sectors. And what I would like to start with is with the impact of COVID on the global insurance sector. Firstly, we see that the impact of the COVID was primarily on the asset side and on the weaker premium growth prospects rather than any other factors. In this case, it's worth noting that actually reinsurance helped a lot in terms of big losses and to withstand these risks for primary players. And generally, the strict lockdown measures that were implemented during the 2020 period helped insurance companies to maintain satisfactory performance during this period of time. And I think initially, when we were starting with COVID crisis, everyone were more pessimistic in terms of how the impact could be on the global insurance sector. But generally, the insurance sector overall showed quite a resilience over this period of time. Definitely, COVID crisis had specifics on both developed and developing insurance market. And further in my presentation, I will primarily focus on the developing insurance markets and how we as S&P Global Ratings looking at the insurance industry. On the next slide, you can see the spread of coverage of the ratings and our assessments of insurance industry and country risk assessment for the developing EMEA. Here, it's not the only companies and countries that we cover. We cover more than 60 industry and country risk reports for only P&C sector, so property and casualty, almost similar to life. And also we maintain our assessment for global trade and reinsurance sectors. So here you can see that generally, despite COVID crisis of 2020, most of the insurance sectors remained resilient over this period of time, and we didn't have any reviews of the sectors downwards or upwards overall. However, there are certain specifics of the industries. For example, there were just a few changes that took place during this period of time. They were both like negative and positive. So if to start with some pressuring developments, for example, this was Jordan, where we revised downwards our assessment, and this was primarily due to the underwriting performance of insurance companies rather than to macroeconomic developments. At the same time, for example, for Russia, we changed our view and we changed it upwards, seeing less risks to the sector coming from the country risks. And at the same time, we were seeing improving institutional framework of the sector, underwriting profitability, and also growth in terms of the capital position of insurance companies in Russia. So all in all, to start with, as I mentioned, we look here at two separate things which are combining our assessment. First is around the country risk, and the second one is around industry per se. So around growth prospects, institutional framework, also product risk, and growth prospects of the market. So to start with the sovereign rating actions. Generally, for the sample that we see here, there were no rating movements. So most of the ratings were affirmed at the level, though there were some rating actions affecting outlooks only. And here you can see that there was a change of the outlook negative for Georgia. And this was primarily for macroeconomic developments as well as for Belarus. We expect that we will review Georgia next time in August. And this is a regular cycle where we review the Georgian economy and the sovereign rating. But overall, as it was already said by David as well, that overall, we expect that there will be a gradual recovery of the Georgian economy. And from the GDP drop of 6% in 2020, we expect that in 2021, there will be a rebound of 4% for GDP growth. Going further and giving a bit broader picture of the ratings and how they were impacted by the COVID crisis. Here we just taken a small sample of the CIS ratings that we are having, but generally in the EMEA we rate more than 200 ratings. And if to look at them, overall most of them are on stable outlook. Over the past 6 months, we see that the overall bias is more positive than it was previously. And this can be even seen through discussion of this chart, because following revision of the industry and country risk for Russia, we revised a number of ratings upwards. At the same time, we put a number of them on a positive outlook. So you can see that none of the ratings are actually on a negative outlook. And main reasons for this are underwriting performance of the companies, especially underwriting discipline of the whole EMEA, and also the case of a better regulatory framework that is evolving in the developing economies. And here it's also worth noting that despite the fact that for most of the countries, the insurance ratings are kept by the sovereign, here you can see that in the CIS region we have 2 companies that are rated above the sovereign, and this is quite a unique situation. And the key strength of these companies in CIS, and we also had a number of examples in the EMEA region, was sufficient capital cushion and liquidity cushion that could help these companies to withstand the stress, meaning the sovereign stress test, if this happens. If to go further in terms of the discussion, one of the most important considerations for the insurance sector is around the capital positions. And we, as S&P Global Ratings, are looking in 2 ways on the capital of the insurance companies. On one way, we look at the regulatory capital, and we see that the capital position of most of the rated insurance companies is solidifying. And here we see a positive trend in terms of the regulatory frameworks that also support further growth in terms of the capital position of the companies. At the same time, from our perspective, we look not only at the absolute size of the capital, but also we look at the risk-based approach of the capital. And due to this, we have our own capital model, which assesses asset and liability risk of a particular insurance company. And here we also see that, for example, for the Russian insurance sector, the expectation that there will be a further strengthening of the capital adequacy of the sector, in particular because of retained earnings that insurance companies are having. And if to look at the broader perspective of the EMEA region and CE region, we see that the positions of the companies are very strong or strong in terms of the capital adequacy based on our model. And one of the supportive factors was that during the COVID crisis, the regulators asked or recommended the insurance companies to suspend dividend payments. And we understand that some of the companies followed this guidance, and this also helped to sustain the capital positions of the sector. All in all, if to speak in terms of profitability as one of the main factors, and here I decided to give a bit broader comparison of the insurance sector with the banking sector in different countries. And you can see that if we take on average for the selected sample in some other countries, the banking sector is showing a bit weaker ROEs than the insurance sector. And for example, if we take Georgia, there is a bit different comparison compared to others. But if we take just the last 2 years, then we could say that the situation is more or less similar to other countries that are represented. And here you can see that this touches upon both developed and developing economies in terms of the comparatives. And here the most to say is that the companies were building their capital cushions, and they were also supporting in terms of underwriting profitability, to which I will come in my next slide. So if to look in terms of comparabilities of the underwriting performance of the insurance sectors in the selected countries, so generally you can see that most of the sectors, except of the Turkey for the specifics of the motor sector, we can see that the companies were either break-even or they were profitable on the underwriting side. And this can be seen not only for 2020, which was a unique year in terms of the companies to adapt to new technologies, which required certain expenses. At the same time, there were low frequency of claims that were helping loss ratios. So generally, there is a number of factors, but overall, our expectation is that these countries will at least maintain a break-even in terms of their profitability, but most of them will show still positive results, but loss ratios will start to pressure as the economies return to their previous, let's say, back to normal, though it's very difficult to say that there will be normal times. So we still hope that there will be better situation, as all of us think. So taking into account a different part of the insurance analysis, which is also very important, especially for developing economies, is around investment portfolio allocation. And here you can see that on a comparative basis, developing economies are more focused on cash and deposit allocations compared to developed. But still, we shouldn't forget here that all developed economies were also starting from this path of cash and deposits. And we see that some of the countries are already gradually going to more Western European approach of allocation to to bonds, which is more broadly used instrument in terms of the developed economies. At the same time, what is important to say here is also a fixed risk, which is persistent for the companies, insurance companies in the developing world, because some of the companies prefer to hold their assets in USDs, and this could add additional volatility. But as we see that there is more in terms of depreciation of the local currency, then the story is that this is also supporting the sector and specific insurance companies. All in all, we've spoken in terms of underwriting, we've spoken in terms of investments, but what is many companies want to achieve as well is growth. And we've seen that in 2020, the growth was muted. And this is clear because of the situation that was going. Many lines were not insured because of the COVID crisis. But at the same time, we see that the prospects can be bright. And one of the important factors for the further growth of the market is ongoing regulatory initiatives that could help the market. At the same time, education of the market could also help. Financial literacy plays an important role in terms of the growth prospects of the market. It was already said that life can play an important role in the medium term, and this is an important factor to consider, especially as life is one of the main business lines for developed economies, and here there is a potential for growth for the developing markets. And so that's to give some final thoughts in terms of the developments of the emerging economies and what we see as the main factors. To start with, we still think that country risk can pressure the insurance sectors, and this will be one of the main areas of consideration. And here you can see on the left, the graph, which is showing the top 10 risks that we are generally defining for all markets worldwide. And here we see that like the major risks that are acute for the global developing EMEA. And the next one is in terms of growth. Growth is very important, and here we understand that with intense competitive environment, this could also lead to certain changes in terms of the market participants, in terms of the mood of the development, in terms of the regulatory initiatives. And the third one is in terms of the asset risk. Here we can define it in terms of the foreign exchange, which I've already talked. And the other one is in terms of the asset quality. We see that for the markets, it's gradually improving, but still never say never. And there is always opportunities for further improvement for the market. So here we see that this could also be one of the main risks for the market. But as we can say that we can always cancel all the risks and say that these are actually opportunities for the market. So stopping here, I would like to wish further growth for the market, for the Georgian one, and further opportunities for growth and profitable underwriting going forward. And definitely thank you for XPRIMM for inviting to the event. Thank you very much.
Thank you also, Ekaterina. I think Mihaela is prepared here to ask you some questions.
Yes, we have 2 questions for you. First of all, what is the long-term outlook for Georgia from S&P point of view?
So unfortunately, we don't have ratings in the insurance world, but we rate a number of banks in Georgia, and generally we look quite positive in terms of the developments. And I think this is a comparative story in terms of banks and insurance, that generally the regulator is very supportive, and this helps the market, and the regulatory framework is very well compared. And we also see that these initiatives that are implemented by the regulator could foster the development. Definitely, there could be a lot of some problems or questions that could arise, but all of the markets were facing them. So I think generally this is a more positive view, and this is in light of the regulatory framework and initiatives that are implemented in Georgia.
Okay, and we have another question. What is the biggest trend noticed in the region due to the COVID crisis?
Trends. That's a good question, because I think there is a number of trends that are going. The one, if to look in terms of insurance markets, I think that the companies are going into digital world, and this is definitely something that we need to observe how it is evolving, because there is a lot of discussions in terms that digital plays an important role. But at the same time, I think none of the companies want to take off the agents from their panel of distributors of the products. And I think the other trend is that companies started to propose new products. And this is definitely an important milestone for the sector and for helping the society. And definitely in this case, the insurance is one of the main contributors in terms of the further support for the society in terms of the protection. So I think this is like a few just to mention, but there are more to come, I think, taking into account the general trends on the market.
Thank you very much, Ekaterina. And now back to you, Daniela.
Thank you also. You know, Ekaterina, everybody is looking in general at you, the rating agency, like to some sort of oracle. We are expecting you to see in the future, if possible. But certainly today we have received at least a glimpse in what is to be expected in this period. Thank you very much once again.
Thank you.
And at this point is the time to discuss with also with the players in the market and see what is their opinion on how the market is doing currently, and more important, what is to be expected for the future, what are the future trends. So it is the panel time. I'm pleased to invite to join the panel Mr. David ONOPRISHVILI again, and then Mr. Devi KHECHINASHVILI. He's the chairman of the Georgian Insurance Association. Mrs. Tamar KALANDARISHVILI, head of PR and marketing department for the company New Vision Insurance. Mr. Irakli DOKADZE, chief commercial officer for Euroins Georgia, and of course, last but not least, Mr. Pata Lomadze. He is the CEO of the GPH, in fact, the market leader in Georgia. So thank you all for joining me in this discussion. And I would like to ask you to start, in fact, with the market perspectives, because we have already heard what happened last year. And what I would first like to find out from you is what are the main potential growth drivers in the forthcoming period, in your opinion, of course. Also, are there some regulatory changes needed that would help you to better perform in the future? Let's start with the lady. Tamar, what would you say?
Hello, can you hear my voice?
Well, I hope you have not very good connection, but hope it does in the end. We are listening to you. Do you?
Can you hear what I'm saying?
Yes, not good, but we are listening.
One moment.
Well, it seems that there are some problems. Let's go to our next speaker, and we will come back to Tamar shortly. I would ask Irakli to answer my question first until our colleague gets. Oh my God. Okay, it's that we have. Okay, Irakli, can you answer the
Hello, can you
question?
hear me?
What are your yes, we are hearing you.
First
Good.
of all, thank you for inviting us. Our company is very happy to participate in this conference. In our point of view, we think that in year 2001 and 2021 and 22, we need much more support from our government in terms of mandatory insurance. So as we already mentioned in a few comments, we are all waiting for mandatory third-party liability insurance, which will be the main driver for forthcoming this all the problematic field that we have now, and to accumulate some figures, some portfolio in our industry. I think that main strength must be done on this point of view, and our company is actively pushing and participating in the process with the government to start this process.
Okay, thank you very much. I see that Tamar is still
I joined from different computer. Can you hear me
okay.
now?
Yes, now you can hear you, and we are keen to hear you, in fact.
Thank you for inviting. Greetings from New Vision Insurance Company. I will shortly answer your questions. I think the introduction of compulsory insurance types such as internal TPL, health insurance, travel insurance will be the main driving force of the market growth, which in turn will lead to tighter regulatory oversight from supervision and gradual transition of the whole market to Solvency II system. New Vision expresses readiness for this. We're attending different trainings, meetings, and we're actually preparing for new regulations. Thank you.
Well, you are a company with a name and declared love for youth, so it's normally to be oriented to the future. But besides that, let's see what the regulator has to say about the market drivers for the future period. Beside the MTPL, the expected MTPL introduction, would it be something else that would help the market growth? Okay.
Yes, actually, as I mentioned, we actually, first of all, we expect this year to be mainly concentrated in maintaining the insurance market in the healthy conditions. Even some maybe slight slowdown also seems certain realistic, but not bigger difficulties or some surprises we are not expecting. And I mentioned already also that first quarter results proves what I'm saying right now. I think the modern technology, IT should be more involved in insurance business. I think companies who really want to develop and really be competitive on the market next 5 years, even not talking about the decade, at least they should have a minimum standards of having electronic equipments, contacts with customers, sign the contract without, because almost all offices of insurance, not only insurance sector, but all business, but we are talking about insurance, almost no front office is working during the several months. It's actually nobody coming to the office, nobody sitting at their offices. So if they don't have contact with the consumer, how they will develop their business? Definitely for that, they need somehow to, in the perspective, and it's not a long run, it's right now, to think how to developing their digitalization, and every company should have their own exclusive certain way to develop. And I really know that for companies were working really hard and spending money. And this is also a point that if you don't spend money in this direction, you never can reach the certain targets, and you really lose the customers. And I think, I don't know, this year we are really trying to maybe we are thinking about this, I'm not sure so far, but thinking to set as minimum requirements to request from the companies, first of all, to have a consumers' right backed consumers' rights. And I think this should be a mutual, and we really don't do any surprise to do it in 1 month or 6 months time or 1 year, but I think it's their own interest to do this, and we will be supportive of that.
Thank you. Of course, digitalization is so large issue, and with so many options available that we can discuss at long what are probably the do's, the don'ts, the musts in this area. But what I would like now, I would like to go to the market leader, to Mr. Romadze, and also switch to another topic, to health insurance. We will hear much about health insurance in the second part of this conference. But until then, I would like to hear from you, what would you say it's the most ardent issue in this business at this time, from this your standpoint at this moment? What is the biggest challenge or biggest opportunity, or I don't know, the center of your attention going to, please? You should, you don't have the microphone. Okay.
Yes, sorry. Hello, thank you very much for this opportunity, and I welcome all the participants. My voice is okay? You can hear me?
Yes, yes. Please, yes.
Good, good. Being the largest health insurer in Georgia, of course, we see a lot of changes, and especially related to the COVID situation. And it includes the relationship, for example, with the state-run healthcare system, the competition, and so on. But if we look at our biggest and most important challenge that we are facing in terms of health insurance is unpredictable inflation in the healthcare industry. Because as you know, the contracts that we are selling, they are individual as well as corporate health insurance contracts. And these are the one-year contracts, which cannot be changed during the insurance period. And in the economic environment, when we see quite strong inflation, which is very difficult to predict, it relates to increase in prices of medications, increase in prices of the healthcare services. Then to stay competitive and to be also reasonably profitable is the biggest challenge, I would say, right now.
Yes, of course. I would go to Devi. You are the representatives of the insurance association, so you are gathering the opinions of all the insurance companies in your market. What would you say in their name on this topic? Do you have something to add?
Thank you very much for this opportunity, and really thank the whole XPRIMM team. It is a great event. All people here are talking about mandatory insurance classes and so on, not because we are relying only on that, but Georgia is a unique market because no one class of mandatory insurance with mass character is present. It is unusual. So if something happens in that regard, or let's say when something happens in that regard, that will be a very big boost for the market. First of all, it is of course the long-lasting story of MTPL, but we have now good news that the government introduced a law in the parliament and we have to work there. COVID is, of course, here also an obstacle. Generally, I would say one story also that a serious issue for our development in 21-22 is how our clients will perform, how big their losses will be through COVID. The new last figures from this year for the Georgian economy are looking positive, except the tourist sector, that is clear, that is also our problem. The other story I want to point out, David was talking about it, life insurance. We hope that with international assistance and so on, we will have a system of tax subsidized life insurance in the future. I would say in the perspective of 2 years or something like that. And the third is, of course, health insurance. And health insurance also in understanding that government health insurance programs run by insurance companies. I think that these things are in discussion because the efficiency and the effectiveness of healthcare financing is a permanent problem. So I hope that we will come in that regard also to some insurance interesting solutions. So I would say these are the main drivers that we are expect from the markets in not 1 year, or this year is already half past. So we are talking about 2021, 22.
Of course, things are moving. And speaking about the preference of the young customers, that will be, in fact, the star topic that we will have in the end of this conference. But until then, I will keep you for a couple of minutes more in the health topic. And I know Mihaela has some questions.
Yes, we have 2 questions. How did the consumer preference evolved during the pandemic period? Can you tell us?
Yeah. Health insurance.
Okay.
We had a growth in health insurance, penetration and premium also.
Pata, could you add something? You are, in fact,
yes,
the biggest provider.
Agree. Yes, I would agree with Devi. Of course, products like motor property insurance, they were less demanded, and we had a lot of cancellations of the policies in motor insurance. But health insurance stayed quite stable. It even increased. So people were more concerned about the health issues, although the frequency of the health-related claims was not very high because from time to time, the clinics were closed. There was a limitation on transportation. But I think we are getting now, already in 2021, some accumulated demand for healthcare services which are coming from 2020. But as an insurance product, definitely health insurance was the most preferred line of business for the existing and new customers as well.
Another question is related to COVID-19. Is it covered by health insurance policies in Georgia? And if it is, what was the impact on the market?
It's a question to me?
Yeah, to everyone.
Yes, of course.
Everyone. It's a question to the panel.
Well, yes, it's partially covered. Especially it relates to the family doctor service for the infected persons. The rest, I mean, the treatment in the hospitals, this is fully covered by the state budget through the state healthcare program. So our partners, family doctors, were involved in COVID infected patients management, not only in insurance, in insured persons, but also some other people as well who were infected.
Okay, thank you very much. I think we can leave for now the health insurance topic and go to another topic that has the potential of creating big events, big losses, important scalable events. And this is, in fact, the topic of the natural hazards. And we will hear a little bit later today about how technology can help improve modeling in this area, especially for the agricultural insurance products, a lot of interesting things. But at this point, I would like to hear from you, your opinion on how well do you consider that Georgian citizens and farmers especially are protected for natural hazards? Is property insurance, especially agricultural one, enough developed? It's covering enough assets in your country so that would be good protected? Let's start again with the lady, Tamar.
Yeah, the state program of agricultural insurance started in 2014 in our country, and it had significant impact on the growth of insurance culture, the proof of which we can say the increasing number of insured farmers each year in our country. We have gained enough experience to talk about the benefits and everything about this product. We can talk about changes like increasing deductible or increasing insurance premium. You know, there are three main risks which are covered by this product. It's hail, storm, and flood. Spring frosts, drought, and diseases are not covered by this insurance. But, you know, if we add some risks, it significantly will increase the premium. And we think that Georgian insurance market is not ready for this increase because the farmers will be lower active. Then if we think that if government supports much more the farmers, then the awareness of the product will increase and the penetration will grow and will be great for Georgian market, because, you know, nowadays there are only two regions which are active in this agricultural situation. It's KHECHI and Irakli, and the penetration will be a great idea for Georgian market. You know, climate changes has significant effect on the market. The loss rate is increasing, and the product itself needs adaptation to this created situation.
Thank you very much, Tamar. Can we hear also from Euroins? Irakli, what is your company thinking about this?
I agree with my colleague. We also are participating in this state governmental agricultural project from 2014, and I totally agree with Tamar. It needs adjustment, but now we have a 3-year plan for more focusing on existing product and to change and initiate new changes in upcoming year. And I think this government project must be prolonged for coming years to see more effects, how it will, what kind of effect it will have on farmers, and to analyze the data and see more and to make more products like this one, which is currently utilized by us.
Well, property insurance protection, and especially against natural hazards, is a hot topic in the CE in general. And one of the things that amazes me every time is that is very, very little information available, in fact, to look at the different countries. But hopefully in the future, these things will change. We have heard from David already in the end of his presentation about his expectations for this year and the next period. Some glimpse of your expectation you gave us also, Devi, but can you put it in, let's say, some more conclusive manner? What would be the core expectations for this year? We will start with Devi.
COVID, much better managed, that is one. Most thing is, of course, vaccination. Second, for Georgia, very important, restoring tourism. That is something that very strongly affects the economy and our mandatory laws, because again, for Georgia, that is a sick story. We have no mandatory laws practically. Third, and digitalization. And I would say because COVID makes also personal contact very difficult, face-to-face contact. So most of the companies successfully, I would say, switch in terms of claims management even to distance and give a lot of assistance to their clients. So digitalization is also a big story, including sophisticated stories like episodic insurance and so on. That is coming.
Oh, thank you. Very condensed. David, do you have something to add from, well, the other side of the barricade, let's say, from the regulatory point of view? What are your expectations, the most important things?
Yes, you mentioned when you asked in previous question to me is that actually regarding MTPL, it's just a matter of time because it's in the parliament. We can't influence much, but I'm almost no doubt that this year it will be passed. But implementation starts usually after passing for several months for the companies to prepare. So it takes maybe, so next year it should be starting. We are very, very intensively working, my staff, my office, regarding drafting a new legislation, which is based on risk-based supervision under the Solvency II. And we are working with the companies as well. Actually, this twinning program project brings and arriving our friends from Spanish authority, and they're working with now companies as well, because it should be a mutual process and nobody should be behind, because if ourselves and the companies, we should not lose the time, because when it comes time to implementation solvencies, then somebody could have a really big problem. So I'm really like that situation that big majority, almost every company takes it seriously, because staff should be educated. It's new challenges, and we should meet and really accept these challenges. And I mentioned also, partially, I would like to repeat that we are very closely working with the World Bank. There is a financial inclusion and accountability project financed by the EU as well, and its part is related to insurance. And we are working now to develop mandatory liability insurance related to medical doctors, builders and architects, and of course for life insurance products, because currently life insurance only required banks when the physical person takes mortgage loans. Majority case is like this. If not, somebody wants to have a life insurance, very, very, very low percentage. So, and of course, it opens the market opportunity. Maybe not this year, because if we draft these laws this year and passing maybe early next year, so then it starts. And not really, I'm not talking on the life insurance. Life insurance takes a little bit more time, but we are working hard now on that. And I think all companies who wants to, majority of them have a license on life insurance. So I think they also will be prepared and we together start. So for investors, I'm talking that investors also should listen to what I'm saying now, that Georgian market is growing. Maybe it's not a big market, but country is small and market also relatively small. But opportunity even from this level as take as a basis. So it's a quite serious opportunities in the future, not for far future, for coming years. And agro insurance, of course, is you mentioned about agro insurance. Agro insurance definitely developing, and the pace could be even higher in the near future. There are some problems, of course. We are establishing government participate, co-financing, and also with the World Bank, we are developing this project as well. Thank you. Thank you.
Thank you, David. You were talking about opportunities, but opportunities are the most preferred topic of my colleagues. So I will let Sergiu to take over for the last question because it's related to it.
The last question is for everybody. You know the golden fish. If you are fishing the golden fish, you have the right for 3 wishes. I am not the golden fish. It's just 1 wishes. I could fulfill it for you. I will start with Tamar. If the crisis give you 1 opportunity, which is this one?
I will answer your question shortly. And first of all, I would like to say that New Vision Insurance was established on the market on 20th of February 2020 when pandemic started spreading all over the world. So we had to get used to this situation. And one positive factor is that development of digital direction, as my colleagues already mentioned, and all the advantages that followed this issue. You know, the costs were optimized. We didn't have to have payroll desks all over Georgia because reimbursement was very easy to get online. And also it saved customers time, and it was very important for us because our customers didn't have to visit our offices because they could get all the insurance services online from the moment of starting the purchasing the insurance, then receiving all the services and also the reimbursement. And also one thing I have to mention that pandemic reduced our insurance market, and because of this is heightened the competition between insurance companies. So we all the companies will have to give our customers the high quality with a reasonable price. So I think this issue turned out to be quite profitable for our customers.
Okay, then high quality for reasonable prices. Irakli, I'm the golden fish. I could fulfill one wish for you. Which is this one for your company for this year?
I will think about it. I will think about it.
Okay, then now the leader of the market, Pata.
This pandemic really opened up a very important opportunity that our company has saw, and we have decided to completely transform the operations of the company, not for the period of pandemic, but also for good. This is so-called hybrid model of operations, where we will, for good, will be working partially from distance, which we think will be much more productive because we will give the freedom and flexibility to our employees to better manage their life-work balance, to have more time for their own planning. And we saw already that this brings up the productivity on a much higher level, and I think this is a very, very good opportunity that pandemic brought to us. Otherwise, we would be very, very careful in deciding to do so. But as long as we have already tested some parts of this hybrid model, we finally decided that we will create completely different working environment as well as performance management of the company, and I think it will contribute into a very intense and stable development of the company.
Okay, Devi, your wishes could become true for the insurance market. Which is this one for this year?
One wish: pandemic down, economy up.
Excellent. David, for the supervisory authority, which is this wish? Open your microphone and start it again. Okay, then. Okay.
I agree with David's
okay,
wishes.
just one wish, yes? Okay, just one.
Yes, one wish. One wish is to accelerate digitalization process in the field of insurance.
Then I have 5 wishes to become true. For Tamar, I will bring more clients. For Irakli, more profit. For Pata, I will bring more performance. I will get down the crisis and getting up the economy. For Devi and for the market, and for the supervisory authority, I try to bring more discipline and more digitalization from the company's part.
Very good.
Okay, Daniela.
I was asking if I'm entitled for a wish too. I would like to see you all next year in Tbilisi and find out if the blue genie of the lamp here in my face has performed well with the wishes that you have expressed. Until then, thank you all the panelists. I think it was a very good and interesting discussion. And at this point, we will go to our last point on the agenda for this part of the conference and meet Mr. Laurent Maresco. He is Senior Director for Markets and Products Expert for EMEA at RMS. When it comes about risk modeling, RMS doesn't need any kind of introduction. They are the biggest, the best probably in the world. And in this period, they are concerned about modeling agricultural risks. I know from Laurent, they have some projects in mind for Georgia or the region around Georgia especially. So I think it would be very interesting. Laurent, please.
Thank you, Daniela. Thank you very much. Yes, so I hope you can hear me and see me well. I listen actually very, with much attention to the comment on the panel on the agricultural risk in Georgia, and I've taken a few notes around the needs of developing further products, maybe the different challenges around education, communication to different players, including to the farmers, and maybe also the challenge of climate change. So I hope this technical presentation, a little bit more technical around what is the current trend in modeling agricultural risk for insurance will be in good inspiration for you. So it's clear for today, as today RMS doesn't have any solution ready, I would say, for Georgia or in the region. But what I would like to show you today is what we have done for the countries worldwide for different type of insurance schemes and why it has been useful. And the main message is that I can just emphasize that already now is that we have this kind of toolbox and expertise ready. So the purpose for me also today is to get in touch with you, and hopefully this will foster further collaboration and discussion, and maybe some part of this development could be interesting for you for the future development of agro risk insurance in Georgia and in the region beyond. So I will maybe just share my screen. Hopefully it works well. So let me know if you can see my screen now. Good. Yes. Okay. So so I thought maybe just quickly before we start, the people who do not know maybe RMS, right, have not been exposed to RMS in the past. I think we have one of the key, the main modeling companies, right, for the past 30 years. We have been developing solutions in modeling around those NatCat risks, as you can see, like wind, flood, hail, and earthquake, and so on. And also on the man-made, like terrorism, and more recently around cyber and, of course, pandemic. Well, it's clear that we have been doing that for different line of business, including agriculture, which will be the topic of the discussion today, and also servicing those different players, right, from the range, all the main actors, I would say, along the risk transfer chain, as you can see on my slide. And maybe one of the key elements also of the position of RMS in this global insurance industry traditionally has been that we are one of they call that model vendor. So we are one of independent, scientific-based perspective provider, right? We are not bearing or trading any risk, so we are really just providing, I would say, independent scientific, modeling solutions and risk management solutions. And this is why we have been also interacting quite a lot with all the main regulatory authorities as well to help shaping markets in different places around the world. So when we talk really about the modeling coverage, as you can see, we have developed models in different places around the world for the P&C business. For the agriculture, so far it has been mostly in India, China, and Brazil more recently. As you can see, the gray zone of Georgia and other in the region, right? We hope to fill in quickly that with dark gray, where it means that we offer solutions there. We already started actually those days because we are developing global flood solutions for the entire globe, including for the region here and Russia and Africa as well. So that's it's coming later this year. But of course, as I said, I think I'm more here to open the connections and increase maybe the visibility of RMS in the region and show you what we have been doing. So when it comes to modeling agricultural risk, it's interesting to see that we have one of the complexities that we have the different kind of products existing today. As you can see from my slide here, there are different type of products existing according, we have named peril insurance products which cover a certain crop for a certain peril like hail. We have this MPCI, which is covering, let's say, multiple crop for multiple perils if you want. There is also an evolution globally around not only covering the loss of yield, but also the loss of revenue, which is one of the trends, and also the parametric, which is one of the most used product where you basically relate a certain yield production to a certain index. So for example, a deficit in precipitation. So I would say RMS has been really active in all those different areas or in the countries where we have been developing products. So I mean, whatever I think the direction you go in terms of developing existing products or new products, actually we have the building blocks to cover all these different type of products. So that's one of the key message I would say. I thought it's interesting maybe to understand why we developed this flood model, this agricultural modeling solution there. I think one of the main reason is that usually there is, I mean, the same awareness that is growing among this agriculture insurance market, that the past data is probably not enough to predict what could happen in terms of loss in the near future. And I think that's well illustrated on this graph, as you can see that the production in tons per year of some crops in India, and you see maybe if I can highlight that with my pointer here, there is some kind of a red curve here. I just highlighted here, which is basically showing a bit the observed yields. They are available in the publicly available database, I would say, from the late 90s. And it's interesting because you could use actual techniques to develop some loss estimates out of that. You get something like this example, 1.7% loss cost. That's your loss divided by the insured value. But of course, now, if you look back longer, if you reconstruct the climate in this region, and you start to understand that over the past 40 years, you had several drought event, as you can see in the gray bar, you see the losses increasing, right, from 1.7 to 2.7 actually. So there is, I would say, this kind of element of a need to expand the perspective beyond just the historical record to better assess the risk as it is today. And of course, it's the same if you look, sorry, I lost my pointer now. If you look at the tail risk, you know, if you can imagine what could be my loss happening at a 200-year return period, so long in the tail, the most severe loss that could happen next season, but that has never been observed. Also, the model is helping, of course, as you can imagine. So I hope all this kind of message resonates if you are used to using these CAT models for PNC analytics, I would say. Now, where it comes to the fun of it, I would say, is that when we start to model agriculture risk, it's actually different from the property and casualty. And I just want to highlight a few, challenges around that. So, you know, when we model this kind of insurance risk, we have always an exposure. We have a certain hazard, like an earthquake. We have the vulnerability, which is describing how the different buildings will react to that earthquake, and the financial, which gives you the loss in the end. So it's the same process when we model agricultural risks. With the main difference is that there's a lot of additional complexity. The first, it's probably exposure, because crop is a dynamical exposure. It's not like a house, right? The house is there, it has been there for last year, it will be there next year maybe. Exposure is changing every year. We are actually never sure about the variety of crops that could be planted next year, when it will be planting. So the planting dates is also an uncertainty, and even I would say the insured area could change quite a lot. So the exposure is very dynamic. The hazard for crop modeling is also very complex, because we don't only deal with the kind of catastrophic events such as a cyclone or an earthquake, right, in the PSC, but here we have also like this attritional hazard such as drought that could evolve, you know, over several months. So we need to capture this time element very well. The vulnerability, as you can imagine, it's very obvious that a house vulnerability to flood in the winter is the same as it is in the summer. It doesn't change. It's different for crop, you know. It depends when the drought hits, just right after the planting, 2 months after, or just before harvest. The vulnerability of the crop is different, so with respect to this drought. So we need to capture that. And as we have seen on the financial side as well, it's pretty complex, because we have this kind of variety of different mechanisms in place. Also the fact that a lot of this mechanism, probably there's a pretty deep involvement of the state in it. So we need to factor that in the way we model the price and the pricing and how this is used. So that's all showing you a bit the complexity of the modeling, but hopefully this makes sense that we can develop a framework. And actually the main goal of this framework is to enhance your perspective about your risk in the region around crop. So the basic blocks, you could have access to those slides. So in the interest of time, I put a bit of text in it after that, so you can read if you are interested. But just to give you an overview there, we start really to model the climate risk. You know, so it's, instead of just relying maybe on the past few decades of climate data, we remodel, let's say, 10,000 or 50,000 years of this climate, and try to create some extremes out of that. We need to build a crop yield model that will predict a certain yield with respect to some input from this climate model. We cross on the top of that the exposure that is provided, you know, like a farmer information, if you want, right, the crop information, and then we compute the losses. So this is the workflow, right? And actually, when it comes to this kind of modeling the climate, I put this here a few examples of what we are doing. The main goal, as I said, I think, without going too much into details, is to really capture some extremes that we have not observed, that we ignore, but that could happen the next season. So that's the main goal, right? This is why we will take the data as it is today and basically re-simulate this execution. So we don't simulate, let's say, what will happen in 50,000 years, right? We just simulate, let's say, 50,000 possible execution of the next few years, if you want, right? So that's the main purpose, I would say, of this climate model. and capturing also the correlation is very important, especially the teleconnection between the large-scale atmospheric pattern that could affect the different regions in the world. In Brazil, this is typically this ENSO index. In Georgia, that's different type of teleconnection system, right? Then once you have that, as I said, you pass this to the crop yield model. And here, as it's written again on the slide, you have this kind of the need to model the different type of crops with the different type of different, growing stages, if you want, and for different type of periods. So it's also very important to understand that the crops may be affected by, let's say, the stress from the environment, such as a drought or frost or something that is evolving a few days of, or a very or hit by one event, one single event, like a hailstorm, as an example. So we need to capture these elements. And the goal, of course, is that there is a lot to learn from regions where we have crop data and that we can transfer to regions where we do not have crop data. So if you take, for example, understanding how I don't know, maybe we have a lot of, hail information or frost information on vineyards in different places around the world, but at some other places, maybe we lack data. So we can export, if you want, this knowledge and reproduce, taking into account the local specificity and benefit from this knowledge, right, in the model. That's one element that is very much used by actuaries when they use those models. And of course, then the exposure. So here it's also very interesting because the kind of use of the model is also inducing much more communication with the farmers and the policyholders, I would say, in a sense that it's important to understand how they manage their farm, right, the farm practices. I put here on the slides different type of elements that it's important to capture and to understand to manage the risk. But on my graph here, you see basically the strong dependence between the yield production and irrigation in India, as an example. It's a good example. It's a very famous example, right? The fact that you have some district in India that are more irrigated than others, which means that they have more predictable production of yield, right? Independently from any kind of El Nino or any kind of drought evolving, right? So that's one element we capture pretty well. And once you have that in my workflow again, as I said, the possibility to model that over thousands of simulations and get the envelope of the distribution, get the extremes, and that, I think that's one of it's a step sometimes that is a bit less sexy in the modeling, right? This loss modeling, but that's very important for insurance because it's not only enough to let's say model the yield production. We need to be able to factor a loss. That means that makes sense. So doing this simulation and in the end also being able to reflect some reinsurance structure into that is very important, or insurance policies or reinsurance policies, right? So this model actually bring the agro risk modeling at the same level than the PNC, so you can merge this kind of business together when you accumulate, you group your risk basically as an insurance company. So it gives you a little bit about this kind of process that is in place, and actually hopefully you understand a little bit the benefit of having more enhanced climate modeling, the crop that could help you to understand your own risk based on the experience of other crops, the places around the world, and the fact that you can generate a loss that is really meaningful for the insurance business. Maybe just one point on that is something we started actually in Brazil, because it's starting quite a lot now, is the revenue protection cover as well. So here the farmers are not only protected against just the yield for the yield production, but again they ensure the price they will sell the yield in the future. So here we need in this financial model, the beauty of it is that we can create this kind of price modeling as well, if you want, price risk modeling. That's something we can add on the top of that. So this is really like a modular element. First test, we discussed a little bit of that. That's the fact that we can play around with the climate model, that may be also interesting for you, in a sense that if you look like here, I would say in Brazil in this example, or we can have the same in India, there's a strong dependence, between some predictable kind of large-scale atmospheric phenomena upfront the season and the yield production. So we could imagine that if you identify some of those climate pattern, and the next year is going in some direction, you could basically run the model with this scenario in mind. You can basically tune the model to reflect more the next season, and basically give a bit more a step into what we could call the yield forecasting, right? So you can just forecast the yield based on very more specific climatic season. So that's basically one such sensitivity. And I guess you are also very interested in what we could do actually in terms of the future climate, right? So it's a topic we have been starting actually this year. RMS released a train of different solutions for the P&C business around the climate change risk, but we start also now to basically to use our modeling as to investigate the impact of future climate. So we can imagine that this kind of climate model, we can tune it if you want to reflect some scenarios for the future and let it go and understand how this translates into an increase, as an example, in terms of loss for a certain crop in a certain region globally, as an example. Maybe my last point, just not to take too long on that, is the fact that also maybe also it's something that's interesting. I'm not so sure how much it's also insured in Georgia, but the fact that we when you talk about agricultural insurance, we mostly focus on crop, but crop is going, I would say, beyond that. We talk about forestry, we talk about livestock, we talk about aquaculture as an example. So that's also something that we have been growing expertise over the past few years. At RMS, actually, it's a long time. We have now developing some solutions for China, where they have a lot of this livestock insurance. It's a big part of the agricultural insurance. Actually, I think 25% of the Chinese the agro premium actually is coming from livestock. And so here it's interesting to be able to reproduce some scenarios of what happened, but also to basically have a model that helps you to manage these risks with additional complexity again in terms of factoring different types of livestock and different types of farming practice management. So if you're interested, there is a blog on that. We put that a few years ago there, so I'm happy also to exchange on that, or have a look if you're interested. But that's also one topic of interest, the livestock risks, which is touching a little bit about the pandemics as well. So I hope it was not too fast. I committed, Daniela, to maybe try to make it less than my 25 minutes to keep it on time, right? If you have questions. But I realized my slides were a bit wordy. So if I'm happy to have that shared with everyone. So if you cannot read, you can, of course, have a discussion. I just summarized a bit. My message here is that we are now, we spent honestly a long time to develop this kind of framework. It's a lot of work to build this agro risk, and now the main element is not to understand after those main countries where we develop that, who would be interested in that, right? So we are really actively looking for the discussions, and I'm very open to be in touch with any of you in the future. If you are interested, if you want to read more on that, a few years ago we published this research specifically on India, but it gives you basically a bit the state of the art of crop modeling there. Published that in collaboration with Lloyd's. So have a look. And yeah, if you have any question, I'm happy to answer to any of you. Thank you.
Thank you very much, Laurent. Frankly speaking, for me, risk modeling, it's something about too much mathematics. I'm in awe every time I'm seeing a presentation of this topic, because it seems, and I'm sure it really is very complex. What I would like to ask you is the following thing. usually, or a decade or more ago, when we were talking about modeling, it was very much about statistical data on a large period of time, etc., etc. And this is something that it's missing in very many of the smaller emerging markets. Is now technology able to somehow take the place of history, replace this the need for such historical data? Can it be?
It's probably not replacing, because historical data is probably the strongest data set we have, right, to base our risk management. I think it's more like an enhancement of that. It's just basically, I would say, creating algorithm and tools that will learn from the history, but that could represent the risk beyond history. So that's the main message, right, I think. So when we do this climate simulation, I explain it's exactly that, right? We try to enhance, let's say, a drought, to reproduce a drought that has never been observed in the past, but that is physically, climatologically plausible, right? So that's the idea. So historical data is, I think, having more data is will be increasingly important. Because they could feed those algorithms much in a much better way, right? So if we think maybe as a quick example, when we look at this new machine learning algorithm as an example, right? That's the fact that we can feed those. They can learn from history, right? They can learn from the creation of this of the models. For example, we train those algorithm on regions where we have models to reproduce the risk where we do not have models, right? And so that's a trend, I would say. And here, of course, data is very important because it constrains the system. Yeah.
Okay, I think Mihaela has also a question for you.
Yes, it's a question coming from one of our participants. What do you need to develop crop insurance model for Europe or CIS?
So yeah, I think this is why, as I said, I think we are very interested to get in with different people. I think we are actively engaging with different entities in Europe, as an example, in Italy, where there's a pretty large crop insurance system in place as well. So the main point is actually that we basically finished now this project in Brazil, and now the team is. I mean, we are looking actively to the next country, I would say. So if you do see there is this kind of interest, this is a time, of course, to get in touch with us. It's not maybe the main message. I think if you understand a bit those different blocks I just showed there, they are not. It's not necessary to build a complete full solution with all of these elements that not necessarily what maybe a certain market needs, right? So we can of course use this as a toolbox, but so that's the plan today, right? It's just to understand where we would like actually where the market needs basically this kind of modeling. Yes.
Well, I think I have just one short question for you. I saw that most of the examples that you were using in the presentation came from Brazil, India, China, very big countries, very big agricultural surfaces, etc., etc. Is it a problem of size also for smaller countries? How there are those from the sea? It would be maybe better a regional approach than country by country one.
So that could be one way to go, right? Because we can learn. I think when we learn, if you want, when we create a model, we learn a lot from neighboring countries that are subjected to some similar climate, as an example, right? So that's of course, yeah, maybe it's a very good idea, Daniela, right? I think if there will be like I would say a supranational entity where or like a federation, I would say, of different entities where there should be like common interest. It has benefit, right? Because we can benefit from the expertise of everyone, and also from the modeling perspective, it makes the development of models and products easier. Yes, yeah. So
okay, then, thank you. I think it's the time for a well-deserved coffee break. So for 5 minutes, we are taking this break, inviting you to grab a coffee, relax a little bit, move a little bit, and we will be back shortly. Thank you very much, Laurent. Thank you very much, all the speakers. Go. Da, deci poți să-l tai. Hello and welcome back. I hope the break was useful for all of you and you feel refreshed. And we will start this second part of our conference talking about health insurance, a business line that is the main feature of the Georgian market, I would say, because has a unexpectedly and very big share in the market portfolio. In general, in the CEE, if you see a business class accounting for 40% of the portfolio, you should expect to be the mandatory MTPL or motor classes altogether. We will start this part with a presentation given by Mr. Theo Alexandrescu. He is head of sales for Zurich, Middle East. And he will talk about health insurance in this COVID-19 context, a difficult context, of course. And we will see from him how much it affected the health insurance business in the region, what are the perspectives, maybe what are the lessons learned. Theo, the floor is yours.
Hi, good afternoon to all, and thank you very much for the invitation. I'm very happy to be together with you after so many years, and I congratulate XPRIMM from keeping the tradition and continues the tradition. It seems that the pandemic even accelerate your footprint in the region with the conferences. Congratulations again. Happy to talk about health insurance. Health insurance was something very close to my heart. I tried to do something in Romania. It's the first market where I started, but unfortunately, I had to start the reform of health in the Middle East, and I started in Dubai, in the UAE, and I expanded to other countries in the region like Oman, Qatar, Bahrain, and Kuwait. It seemed always the perception is that the market here is in Dubai is very rich and can afford multiple actions and initiatives. But in fact, the overall health insurance started back in 2014, and the market was not quite so developed. Today, after 7 years, we speak about a market that it's in a range of $4 billion. Only in the UAE, in the region, reached something like $12 billion, but with a loss ratio, with a benefit ratio that is close to 92%. And it was even losing money in the past, in the last 3 years. But the government implemented together with the insurance companies new strategies, and one of the most effective and critical was the fraud, waste, and abuse. The fraud, waste, and abuse helped to drop from 18% to almost 7-8%. That helped the profitability of the market. Another important aspect is that the medical inflation is one of the highest in the world. It's a double digit. It's around 15% in dollar terms. And this makes the insurance premium to grow too, but also the loss ratio to be quite high. The profitability of the companies, it's around 3 to 5% max. most of the insurance companies, they are still losing money, but the top ones like Cigna, Bupa, Allianz, and MetLife, they are already scoring the profit. The pandemic was a strong test for the market, and I think at least the UAE passed it very well. If you look at the overall rates, the statistics, the total death toll was something like 1,600 in 15 months with a population of 10 million. And of course, this was helped by the early start of the testing and vaccination, but also about the digital component of the system. The telemedicine, the remote, and the remote medical services were implemented before the pandemic. And now the biggest concern is around the mental health that has a serious impact on clinical diseases, the long-term impact of the pandemic on chronic diseases and other related to those that they had the infection. And also the most important is to continue to expand on the digitization of the medical services. Look, I don't want just to talk about the what is happening in the UAE. Please ask any question. But the overall, I think, medical system here, which is like a social system, but it's privatized. Yeah, it's not sponsored by the state. It's quite a great experience that proven that can for a premium that at it's a minimum of $20, you can have a good minimum package, including the chronic diseases and special programs like diabetes, hepatitis, cancer.
Well, I would like to ask you something, if you allow me. In most countries, the COVID-19 situation led to reduced access to the medical services for patients with other diseases than the COVID one. Only these days, with the relaxation, we are seeing the hospital going back to a quasi-normal working regime and accepting patients with other illnesses. In terms of health insurance, was that visible? Less claim ratios maybe improved? I don't know. How
yeah, I
was
think
the impact?
the benefit ratio dropped from 90 plus in years before, 19, 18, 17, dropped to 50%, but mainly driven by the fact that individuals were afraid to go to the hospital. There was no specific restriction because the infection rate was quite low, but there was some the sentiment was that better to delay screenings, preventives, and even the treatment of the chronic diseases. It's proven statistically that at least in the Middle East, 60% of the patients with a cancer did not visit in the first 8-9 months of the pandemic. They did not visit for screening, and this will have a long-term impact in the loss ratio, but much more important in the overall health of the individuals.
I think Mihaela has some questions already on the chat for you.
Yes, my first question. Oh, yeah, it's okay. My first question is referring to what you said before about the mental issues. What are the ways to tackle this on long term? And second question, are these covered by insurance policies?
Yes, the answer is yes. It's covered by the basic package, which is mandatory. Of course, there are some basic services. This will have a big impact because we, as an industry, we have tested the impact on chronic diseases, impact on the vitamin deficit, and on the hormonal deficit of the depression and overall the mental health. I think it's too early to anticipate the overall impact, but we expect and the premium to increase due to the fact that during the pandemic, the mental health have been negatively impacted.
Okay, and other question. So let's make clear: in EU, you have a basic package, who is mandatory for everybody, and some facultative packages. Yes, and in when this basic package was introduced mandatory for everybody, what were the ways to convince the stakeholders to accept this reform? Because in other countries there is an issue with the public stakeholders in accepting private reforms.
Here was much easier because was not resistance from public social system, was nothing, and was mandatory for all the employers to buy private medical insurance with and the insurance companies to provide a minimum package with a defined cost by the government, which actually was a social system privatized, sponsored by the employers and designed only by the private carriers. Was a little bit different because was on the green field actually.
Okay, and in order to buy the facultative packages, what were the ways to convince or educate the population to buy supplementary health insurance? Fiscal facilities or?
Look, the beauty of this region is that there are no taxes. There is no tax on personal income or corporate tax, and there are no deductibilities. Yeah. On the other hand, the employers are sponsoring the voluntary part too, in order to attract and retain the talents and to the workforce. They provide extra on top of the minimum packages, which if the average the premium of the minimum package it's equivalent of $20, the facultative, the voluntary, it's something like $2,000. It's probably 100 times more. And the average of the market, it's something like 1,500, which means that most of the employers are providing voluntary benefits, medical voluntary insurance benefits.
Okay, thank you on my behalf. Daniela, back to you.
I cannot hear you,
I was afraid that our mics will not work together, so I closed mine. I would like to ask you, also considering your experience in other countries, not only there where you are now, or maybe in Romania, you have seen for many years the Romanian market. What would be maybe the core element to help development of private health insurance? As you very well know, here, for instance, there were years of discussions about the structure, what is covering the basic public package and what not, if it should be complementary or not. From everything that you have seen, how do you think it works best, let's say?
I think for all former communist countries from Central Eastern Europe or from the CES, I think one of the key elements is the state, the government, to involve in the development of the private medical insurance. I think this is a key element even for the efficiency and performance of the medical system overall, public or private. One of the reforms that in most of the countries in Central Eastern Europe work well, I know that always there are things to be improved, it's the pension reform. I think a similar approach to the medical should be considered something similar with a pension reform, where a component of the social contribution to be redirected to an insurance carrier, private insurance carrier, or state at the employer or employee discretion. This will really accelerate the development of the private medical network, but also will create efficiency in the system. To give an example, it's the model that we have implemented in the Middle East, the fraud, waste, and abuse. It's considered to be at in Central Eastern Europe to be at the level of 40%. Imagine that almost 40% of our contribution when I used to be in Central Eastern Europe is to waste, is subject to frauds or abuse. Imagine that only half of this to be returned to the system. And this is the scope of the competition and of the private sector, to be the watchdog of how this money are spent.
Well, this is quite a convincing advocacy for the private health system. And my last question will be, this kind of approach of transferring some of the health contribution towards a private player or in private management, would ensure let's say a broad first layer or and then if you for let's say like a somehow basic package of services, and if you want something I don't know, treatments in foreign countries or special procedures and everything, you could have on top of that another kind of insurance, somehow like in pensions, is the first layer, and then in addition.
Yeah, I think in this type of reforms, the role of the state is very important, because it has to strongly regulate and reinforce the regulation. This is equally important. I think let's say the success of the UAE / Dubai reform was the fact that everything is through the government. The claims payment, the appointments to the medical providers, it's only through a platform which is common for all carriers. It has to be a minimum package because it has a social impact. And this minimum package is defined by the government, and the price, not only the content of the minimum package of services, but even the price together with the market. But on top, automatically on top will come the facultative, the voluntary. If you allow me, is a parallel between second pillar and third pillar of the pension. The second pillar is mandatory for all, of course with some age limits, but it's mandatory for all, and the third pillar is completely voluntary. The same will be with the medical. We need a minimum package. We need a design regulated package in terms of features and price, and we need the regulator to control this. But this will allow to build on the third layer, the voluntary, which will become the major component of the system in years.
Okay, meanwhile, although I have announced that it is the last question, another one came. So, Mihaela.
Yes, we have a question from Mr. Alexander Denton. Given the medical inflation seems to be driving costs, how much would you say controls on fraud, waste, and abuse impact this?
Yeah, I just mentioned that in the market initially before the implementation of 20 patents that are monitored by the regulator and by the insurance companies, the fraud, waste, and abuse was something like 18%. Now, after the implementation, gradually implemented up to 20 patents with a drop to 8%. I think this is something that was relevant and impactful in the business.
Okay, then Alexander says thank you. Well, and I am saying the same thing. Thank you very much, Theo. Stay with us. Maybe we can ask you something again later if it is the case. And
thank you very much.
Thank you very much. Thank you. And now let's see also from the local players, and to get a better picture on what are the main issues on the local health insurance market, we will hear from Mr. Michael Japaridze, CEO of RD Insurance. Michael, welcome. Let us know what is new in your opinion. We have already discussed in the other meetings, but if you would need to summarize a little bit your opinion on the health insurance market last year and its perspectives in Georgia, what would you say?
Hello, Daniela. Hello, thank you for having me. Thank you for organizing this event. Notwithstanding that there are challenging times, but still it's good to discuss the issues brought up here. So challenges, as we were hearing here, are more or less the same. I mean, concerns are more or less the same, and the local challenges was in some ways the same, in some ways different, considering local aspects of the health system, which we have currently in Georgia. So if you look at the market overall, market grew in terms of local currency. But if you measure in terms of US dollars, market shrinked actually, because the premium in dollars wasn't that much that inflation rate or currency depreciation rate. Policy numbers also grew, but it wasn't that much significant, but still they grew. The main issue, if we just break down the issues that we have currently on Georgian market, major issue is the hard currency. If you see, for instance, year-over-year depreciation in 2012, it was 15%. Market grew 6%, so net effect was negative 9%. So actually, I have many, same thoughts that our prior guest had, Mr. Alexandrescu, and there are same things, many things is the same in Georgia, except that we do not have the private health insurance scheme the same as the locally there. Idea is that we have, as you probably know, we have a universal healthcare program managed and funded by a state, and we have private scheme. In private scheme operates just independently without any state support or intervention or whatsoever, and the state scheme operates on itself, but it's very, very inefficient, I would say. And one of the, not the only, but one of the main contributors in medical inflation in state programs, because state is not efficient. There are lots of wasted resources there. So there are lots of delays in payments towards clinics, and some burden in the pricing comes on the private sector, since private sector has to pay much more promptly all the claims that are due. And so some sort of the pricing comes on the universal healthcare program. The biggest contributor in the depreciation and increase in the premiums are, of course, the currency rate. If we think about what we can do regarding this issue, there are numerous things to be done. It's not just one issue that you can cope with and you can just tackle the problem. I think you have to first of all reorganize the whole system. You have to involve private insurers more broadly than it is now, because there is no watchdog in the system. There is no watchdog whatsoever, because state directly funds clinics on the claims that they say that they are due and entitled to, and there is no check and balance. So I think system could be more efficient, much more efficient actually, not like significantly efficient, I would say. So then we have to have the same system that you also mentioned, that we have to have this minimal safety net, minimal package that will be mandatory for the minimal safety net. This is social issue, I would say, not commercial issue. And there should be competition in top-ups. Companies will have and build their competitive packages on top-up and on top of the base layer. And then they will be very easy to leave the private sector to the private insurers and to do a state management in this issue. So to the system, state and private can collaborate in this issue to have much better system than we have now. What we observed during the pandemic was that first of all, some companies preserved the insurance policy without any corrections. Some companies had just emergency schedules within our programs, and some companies even they laid off their employees, but they preserved the insurance, because insurance versus salary ratio is the way low in Georgia. It's very cheap to buy insurance, and it was economically more viable to stop the salary and to preserve the insurance. So we had this one trend really emerging and watching. And after the business is more or less reopened, they resumed the salary and the insurance was there. Now, also it was, as I'm talking about the trend, also it was a good trend that retail started to pay more attention to the coverage, but insurance companies, we are more reluctant to do retail health insurance packages because it's more risky in terms of the particular risk profile and in terms of the collection of the premium, because it's very difficult to collect the premium on the retail. So these we are more or less the system that more or less the dynamics and challenges that we had on our particular market. And I think that if managed correctly and if done properly, reform of the current state system, the healthcare system, which is run by state, would contribute numerously towards better healthcare system in Georgia and insurance system, of course, as well.
Did I understand well? You said that in the cooperation between the private health insurance and the state would be something like a clearing system or clearing and supervising system. Things would go better, that will be more efficient in financial terms, of course.
It would be much efficient. It's not that it's like 5%. It probably may be efficient like 25 or 30%, because what we have now in terms of, for instance, hyperdiagnostic, Mr. Alexander also mentioned this. When you have a single payer system and there is a state paid system and the clinic, and there is no watchdog, you have huge loss of energy and economic energy, huge loss, and nobody is watching why is some particular economic resources spent on particular issues, if it's needed or not. In our private schemes, what we have now, we're managing this day to day, right? We have to have good relationships with the clinics. This is one thing, and we have to manage our bottom line, right? So these two razor thin issues we're running on the edge of the blade. You have to preserve both issues. You cannot be too strict, but you cannot be, very inefficient in terms of the managing of the claim. So we control as hard as we can. Still, we have hyperdiagnostics. Still, we have lots of economic energy lost. Still, but just imagine we have it. Then imagine what sort of wasted resources state may have. It's like hundreds of millions of Georgian lari that you can measure these losses. And when we are looking all the potential that can be utilized, it is like mind-blowing. So what I want to emphasize is that state must and may do its job good, but it's if there is proper system, transparent, and incentives are there, private sector won't leave the place without filling it. It's impossible.
Okay, I have one more curiosity. You said that health insurance is very cheap, let's say, in your country as compared to the salaries. And in this case, I remember what I have read many years ago. I think it was about the Armenian market, that health insurance was very affordable, very extended, with a very big penetration in the country, but people were using it for thousands of very small claims, which made it quite inefficient in economic terms for insurers, because okay, the actual value of the claim was very small. It was a very simple operation, cutting the finger or something, but the administration costs associated with handling all these things were very big. Is the same somehow also in Georgia? What is covered and what not?
Well, I will just break down your question in several parts. One is that if you take Georgian claim structure, you have outpatient care and the pharmacies making up almost all the claims, like 65 to 70% of all claims. Just imagine, this is huge. Mostly we have minor losses. This is the same because they are more or less our insurers, they are managing their minor losses. I understand that insurance, and you're correct, and I agree also that insurance is for major losses, not for minor losses, because minor losses can be handled by most of people. But currently what we have structured is the demand from the population is to manage their medical bills, not like major risks. So that's why we have this huge discrepancy. The second issue is that in terms of the claims handling, of course there is cost for claims handling. Of course there is. Of course there is some administrative costs, but these administrative and claims handling costs help to reduce all these hyperdiagnostics and all this excessive economic, excessive loss that we have in healthcare, right? Because if you do not have the claims handling well prepared, well digitized, well equipped in terms of personnel and equipment, how you can reduce the claims at all? I mean, how? So the same system is one of the arguments that is brought up by state officials in terms of the, argument against private system is that you have claims handling. Yes, we do. I mean, we have to handle the claims. I mean, because there is no claims handling whatsoever, and there is no oversight whatsoever, increases the losses in terms of loss ratio. And their argument that we have 0.9% claims handling ratio and you have 15 or 20, it doesn't make any sense. It doesn't speaks in terms of efficiency of the system. In reverse, I would say, you have to measure what is lost, what they lost in terms of thermodynamics, and then you have the apprehension whether the system is good or whether the system is bad. Claims handling ratio is not good measure of the efficiency of the system in itself.
Okay, I understand. So choosing between two not very good things, let's say, better is to handle claims very strictly. Otherwise, money are lost on.
So
unexpected and unpredictable ways.
What is better, to have like $1,000 wasted, I mean, spent in a state program that has like 1% claims handling, or $700 spent in private scheme on the same services but having 10% claims handling? Which is better for the state perspective? Of course, state had an economy of $300 or Georgia learns with 30% of economy in terms of economic value preserved. But in this case, we don't have this. So I think gravity will do its job. So sooner or later, system will be reformed.
Okay, until then, thank you very much, Michael. I think we have a clearer image of the system in Georgia and its status. From here, we will go a little bit to look on the other side of the medical business, to the insurance of the medical personnel, because if patients are entitled to a lot of care and the best services, it is also very true that medical personnel can be confronted with reputational or even financial risks when their abilities in practice are making the case in some situations. And we took advantage of the fact that the World Bank is looking with much attention to this topic these days in Georgia and in other countries also. And we have invited Mr. Klime Popovski, Professor Klime Popovski, who, besides being professor of the University of St. Clement Ohridski in Macedonia, is also a World Bank expert in this project on medical malpractice insurance in Georgia. And he will share with us in a short presentation some ideas about the most important aspect in this business, and of course looking closer to the Georgian market a little, following the World Bank study. Thank you. Klime, the floor is yours.
Thank you, Daniela. I hope that you can hear me. So,
yes, of course.
From Macedonia. As always, I'm very honored and pleased to be invited from the XPRIMM and also from the insurance supervisory authority from Georgia and my close friend David to participate on Georgian traditional, almost international insurance conference. Actually, I started even from the first insurance conference, so I'm present in all the XPRIMM conferences in Georgia. I'm particularly happy that prior to COVID and after the COVID, somehow I'm related with Georgia, because my last business trip before the COVID was in Georgia. And I hope that 1 week from now, I will be again in Georgia. So it will be my first business trip after the COVID lockdown. So in that respect, I'm really excited. On today's topic about medical malpractice liability insurance, which is somehow related with the World Bank project, I will not discuss maybe about policy recommendation, because it's still this project, it's on the working version. And I will share with you some international best practice about the medical liability insurance. And I will share some statistics and data about the Georgian and about the Georgian insurance market on this topic. So let me start first with some general introduction about the professional liability insurance. So the purpose of professional liability insurance is to protect the professional persons against legal liability to pay damages to persons who have financial loss arising from their own professional negligence or that of their employees in the conduct of the business. Usually the insurance policy offers indemnity strictly on a legal liability basis. From the economic point of view, the liability insurance only accounts a very small part of the premiums collected worldwide. So I have some statistics at the European Union level. So recent data shows that only 11% of the non-life insurance premiums are collected with the professional liability insurance. But there is no doubt that the liability insurance plays a much greater role for the insured parties, for enterprises, for professionals, and of course for consumers. In fact, when liability insurance exists, they can better plan their future activities, especially the business enterprises, including their risk management appetite. And in that respect, there is a huge space for increasing the penetration of professional liability insurance. The driving factors who accelerate the growth of professional liability, we can identify it in three groups. One group of factors is related with the readiness of more people to seek professional advice and become involved in the litigation. The second group of factors is related with the availability of after the event legal expenses and the use of contingency fees. And the third set of driven factor is related with establishing the different professional bodies who actually to their members, they imposed some minimum professional standards and criteria, including mandatory professional liability insurance. So one of the interesting issue related with general, professional liability insurance is how to insure the insurability risk, because the liability is very high to insure. A key factor limiting the insurability of liability risk is the difficulty of projecting the claim cost, which is essential for the pricing of risk. This is usually referred as ambiguity or parameter uncertainty and includes the problem of estimating the probability distribution used for pricing. The uncertainties may be more acute due to a lack of historical claims or related data, or to imperfect scientific knowledge about the risk. Also, it's good to know the main difference between the liability and property covers. Like liability coverage is generally broader than property coverage. Liability insurance may cover unknown and unexpected risk, including significant losses that may arise from changing interaction between the technological innovation, society, and the legal environment. On the other hand, property insurance is mostly designed on the basis of named perils, providing cover for explicitly defined causes and claims, and the claims cannot exceed the value of the insured goods. Now, let's come to the medical professional liability. So the legal responsibility for medical liability is not a new concept, with a history that can be tracked back to the Code of Hammurabi in 2030 BC. Also, the Roman law recognized medical malpractice as a legal wrong, and this concept was expanded and introduced to continental Europe around 13th century. Now, most of the European medical laws, based on our research, they state or they define the professional liability as medical personnel is civil liable for any damages incurred by error, also including negligent or imprudent behavior or insufficient medical knowledge in exercise his profession. So in the medical professional liability, we have two approaches: from individual point of view or from health workers, and also from the institutional liability, from institutional point of view or medical providers. So both they can cause liability exposure. One of the most common allegations against medical workers you can find here are surgical error, improper diagnosis and test, lack of informed consent, and use and administration of anesthetics and drugs. Now, let me address very important question. What kind of different system of compensation for medical malpractice liability exists worldwide? So we have combination and existence of standalone system in different countries. Of course, the medical liability insurance is one of the system, but my focus now will be to give you some few idea about the others, and then I will come to the medical malpractice liability insurance. I will start with risk mitigation. Actually, risk mitigation is related with the risk management program of the medical providers and individual health workers. Many countries now, they have established monitoring and supervisory bodies which aim is to evaluate the medical risk at large and improving the more systemic reporting on medical errors. So far, I know that also in Georgia, this kind of system was established. In a no-fault compensation system, the assessment by the court of healthcare liability is not a precondition for granting indemnification to the injured patients. Rather, the trigger to compensate is generally based on the injury itself or the fact that it could have been avoided. These systems may be privately financed through commercial and non-for-profit insurance entities, such as the case in Denmark, Finland, or publicly financed, such we have a case in Sweden and New Zealand. Now, let's come to the other alternative system that exists. In some countries, for historical and cultural reasons, as well as owing to the particulars of the market, medical malpractice compensation is dominated by one or several non-profit associations of health workers or medical defense organizations devoted to the coverage of the medical liability of their members. For example, in UK, doctors working in the National Health Service are directly compensated by the state in a non-insured state-funded scheme. In many countries, in order to ensure that medical workers and hospitals remain solvent in case of major claims, insurance coverage for medical malpractice liability is made mandatory by the law or good practice codes. Usually, this requirement mainly applies to individual health workers. In France, for example, after 2002, when we have massive withdrawal of insurer and very huge premium increased, they fostered the creation of temporary pool of insurers. This insurance pool, which was created for medical liability, brought together almost 20 insurance companies, and still this pool exists. Another option to enhance insurability is the introduction of the guarantee funds in order to assess and cover high-level claims or limit the long-term nature of medical risk. Like in Sweden, we have the Pension Insurance Center, which is a pool of insurers which works as a guarantee to cope against insurance insolvency. Then first-party insurance for victims of medical malpractice also would pay compensation for injured victims without any reference to practitioner to medical workers would be negligence or responsibility. Like in Netherlands or in Germany, compulsory direct insurance for persons who take part in medical experiments programs was introduced that provides minimum coverage to victims. So let's now touch the most important feature of medical malpractice professional liability insurance. So I will start first with the rate making. The basic building blocks for medical malpractice rates actually are the same as those to other property and casualty insurance products. So the rate will consist of loss cost or poor premium plus the expenses or the insurance and factor for profit and contingencies. Insurers use historical past loss and expense information to forecast and adjust the current rates to those that needed for a future period. Risk segmentation and adverse selection is in the healthcare field very problematic. So it can be very difficult to distinguish between a physician with poor skills and physicians with high skills who take on more difficult cases. Both may have poor patient outcomes, but without a careful examination of the incoming patient population, which is rarely practicable to undertake, and insurer is likely to charge both physicians with similar rates. So risk segmentation in medical malpractice insurance is generally based on geographical area and specialty type, but relatively little is based on some measure of provider quality or on a malpractice claims history. So this is good, very good to know. Then the claim amounts that medical malpractice insurance pay out are generally determined by the civil law, tort law, and court experience. The compensatory damages are often separate in two types: economic damages, which are generally intended to compensate direct economic loss, such as the lost income and cost for medical care, and non-economic damages, which are not tied to direct out-of-pocket expenses, and they include damages due to pain and suffering. And now also the very most important question related with the work of actuary. This is the technical provisions or technical reserves. One of the most difficult and important tasks for the actuary is the estimation of the necessary future amount needed to cover the unpaid liabilities. A lengthy claim settlement process characterizes the medical liability. Thus, it is critical for the actuary to make the best estimate possible of the ultimate settlement value of all losses that the insurer face. One of the key elements in the medical liability claims is loss development. So the average time between an accident and the payment of a claim is 4 to 5 years. So that's why we have a lot of challenges related to the technical provisions. And the very last point regarding to the main feature of the liability insurance products is related with the coverage. So there are two basic forms of business insurance coverage, and those are occurrence-based and claims-based. The only difference between a claims-made insurance policy and occurrence policy is how the coverage is activated. In the claims-made form, covers incidents that are reporting during the active policy period or an extended reporting period and occur after the policy retroactive started date. Occurrence-based policy protects incidents occurring while the policy is in force, no matter when they are reported, even if the claim occurs after the end of the insurance. What is important to know that the most relevant types of policy that dominate is claims made. Even the survey that I conduct in Georgian insurance market shows that the claim-based is the main form of the insurance coverage. And the last point, it's about the rate-making regulation, if we need or if we do not need. So rate regulation may have an important influence on insurance prices. In theory, regulation could keep prices higher or lower than they would be in the unregulated market. Now, Georgia is facing with the challenge of the new law on a mandatory TPL, and most probably they will start with regulation of rate making, which will be the same case maybe if we have other mandatory liability insurance product. Now, what you can see in this figure that there is 6 regulatory approaches regarding to the regulation of rate mating for medical liability insurance, but I will not go through them in more details. And now I would like to finish with my presentation on some general overview about the medical liability insurance in Georgia. So there are 7 insurance companies that offer malpractice liability insurance, but however, only 4 they have some sales. The other 3 they have products, but they are not very active. I have data for the last 5 years, and those data I collected through the survey and with the support of the insurance supervisory authority, because you cannot find in the official statistics about the publicly information on medical malpractice insurance. So as you can see that the premium is not much, and we have only over 4,000 insurance contracts. Also on the lost experience, we can see that this line of business is very profitable because there is a low litigation environment in Georgia, and the claims awareness also is very low. So you have some numbers about the average claim paid and the amount of the largest claim that was paid. In the distribution channel, the main distribution channel is direct sale, and then it's followed by the brokers with 26% and agents with 21%. What are the main product characteristics, which is very also very important, that the insured sums are very low. The rate factors that the local insurance companies they use depend of if they sell to the health providers or to individual health workers. So for the medical providers, as a risk factors, they use revenues, the number of patients, number of beds in the hospital, number and structure of the medical persons. And for the individuals, of course, you will use the professional experience, the loss history. Usually the insurance policy, they have deductibles and the average of 5%. And you have also statistics, which is in the middle of this graph, that shows who are the main buyer, if they're individual health workers or medical providers or hospitals. So the main buyers are individual health workers. So this is my last point. And as I said, this project is still live, and hopefully soon we'll come up with some policy recommendations. Of course, our idea is how to increase this insurance product, and our recommendation to the government will be to impose mandatory form of liability insurance. Also, we have the same case in Macedonia, for example. We have mandatory liability insurance, but the problem is that there is no enforcement and nobody control if the medical workers, they buy or they don't buy insurance. So that will be the challenge, how we will, if it will be a solution to impose the mandatory medical malpractice liability insurance, who will follow if the medical workers buy or they don't buy insurance. So thank you very much for your attention, and I'm open if there are any questions.
Thank you very much, Klime. I would like to ask you, as I know you have looked to several markets, is there any kind of bolus-malus system associated with this type of liability insurance for medical? So if you don't have any kind of...
Okay, I mean, in general, the bonus-malus system is present in each product, and but in the medical liability insurance, so far I didn't found any bonus-malus system which which is disclosed in some official reports. From the company side, what I check with some international players, like with VAG, for example. So I checked with the VAG, and I didn't found that they have a bonus malus system.
Okay, one of our participants is asking like this. From your experience, the issues that we have encountered for international reinsurers is the lack of claims information and the low limits requested. If the government force higher limits, do you see a similar MPS being established in Georgia or the region?
What my findings said that, because the insurance sum are very limited and risk capacity of the company are sufficient to absorb the current risk of the policy that they're selling. So nobody buy reinsurance at this moment in Georgia. So, however, if the proposal will be to have some higher amount of minimum insurance sum, then means that it will be open a huge space for the reinsurance, because reinsurance then will be more than needed. And of course, then it will be a potential for more close cooperation between the reinsurance and local insurance company. Of course, there is no much information about the claims history, but from somewhere you must to start. So that means maybe it could be with this agency for who supervise the quality assurance in the medical service. Maybe they can be the spot where the claims records could be stored and to share between the insurance companies, and through them to be shared with the reinsurer.
Okay, thank you very much, Klime. Very appreciated. I'm sure that this is a topic that we should and we could discuss about a long time. For the time being, I'm a little bit forced to go to our last speaker for today, because we have a time pressure. But also because I'm really anxious to hear what he has to say. It's a very interesting topic. His presentation is called Mobile Generation. And the presenter is Emanuel Genge, Innovation Director for EMEA at RGAX. Being innovation director already sounds very interesting. And in this moment when the generations of customers are changing and the new ones are becoming more prevalent, let's say, or are getting prevalence, their preferences become very important, and their lifestyle becomes very important also for insurance. What can you say about the mobile generation?
Perfect. Thank you so much. I'm very, very happy to be here, to be part of this, to be here with you. To be honest, I'm being invited by XPRIMM for so many years. When I started in the industry, I was already connected to them. So I know the strategic work that they are doing. So I'm very happy to be part of that. So what I'm going to do is to share my screen, and then we'll be able to see my presentation. We're going to go through that. Happy to answer to questions. If we cannot answer to this question now, obviously we'll be able to connect either by email or from on LinkedIn. So my name is Emmanuel. I'm based in Madrid, but I'm French, as my accent is telling you, and I'm working for RGAX, which is part of the Reinsurance Group of America. So I'm a reinsurer focusing in innovation, and RGAX is the transformative engine of RGA. So we're looking at new project, new opportunity services to serve our clients, partners, such as life insurance company, health insurance company, insurtech, and so on and so on. Okay, so we're going to start a presentation. I'm sharing my screen in 1 second. And obviously, if you have a lot of questions, I will be happy to answer after that. So let me go and share it. Perfect. Can you see my screen now? Yes, all good?
All good, sure.
Okay, perfect. So, well, normally you need to discover what I'm talking about it, but obviously Daniela already told you, we're going to talk about the mobile generation, because what is going on today is that we see that the numbers of mobile that we have in the world is getting very close to the number of humans that there is in the world. And we know that there's a lot of people that absolutely don't have access to technology, but we also know that a lot of people are too young to have access to technology. But even with this, we see that there's 4 billion of mobile user in the of mobile devices in the world. And what exactly this is telling us. So on the next slide, what I wanted to show to you is that when we're looking at different communities worldwide, we always thought that we need to look at our clients based on their country. So I'm in Georgia, we'll be looking at the Georgian people and say, well, we are like that in Georgia. But the reality is that looking at communities, we see that the first main community worldwide is the Facebook users. And then we see YouTube, and then we see Tencent, and then we see WhatsApp. What does it tell us? It tells us that wherever you live, you are always connected by something else from people that are not even in the same boundaries as you. And that tells us quite a lot about our customers. The next slide is kind of a journey that will help you to understand how customers have been changing a lot. So no matter what age, what experiences you might have today, if you look at this specific customer journey that I'm designing here for you, you will recognize that there is certainly 50, 60, 70, and sometimes 100% of the element that you are seeing listed here, you will see that you're certainly part of this. So what kind of element we could be talking about here? It will be, for instance, if we look at, if you go to a meeting, are you using an app to order the taxi? If you want to order lunch, are you using your app to order lunch? If you want to speak to your friends and family, are you using WhatsApp? Are you using Facebook? Are you using Instagram? And what you can see there is, I'm definitely sure, either that you are 50 years old, 60 years old, or even 24 years old, in this conversation that we're having now, definitely there's a lot of elements here that you're following. And that tells even a second learning from our customers. So the first one, we saw the communities. The second one, we see that the customer journey are more or less similar, no matter your age. And that's why we're talking about this mobile generation. Other thing that's super funny, and if we were to do a study, and that the study has been done in the US, we see that 1 in 3 person prefer to abandon having sex than abandoning a smartphone, which tells us something new again about this mobile generation, is that we're starting to be addicted to our mobile. The next one is really to resume all of that and telling you that, please, if you work in marketing, if you're a CEO, if you're a CFO, whatever your position in a company, stop only thinking of generation by age. Stop looking at your customer saying that this is the baby boomer generation, so they think like that. This is the millennial generation. This is the Gen Z generation. The reality is that all of those people, no matter their age, they all are part of the bigger generation, which is the mobile one. They all use social media. So it could be because I'm using LinkedIn. They all use their phone to order things, even to book the restaurant, to book the cinema, whatever they have to do, they're all using that. So your strategy as of today should switch from a thinking of generation by age to the generation by how do they connect and how do they use their mobile. And that's very important for any strategy in health insurance, life insurance, or even motor insurance. The next one is thinking of that. When we're looking at life insurance, for example, that is a study that has been made in the US. We're asking to people on different age. We're asking them, what exactly is the key point for you to buy insurance? And what they are telling us is that it has to be easy to understand. And then we see once again, no matter the age of the person, no matter the generation, they come back and they're all part of this mobile generation where they say, keep it simple, stupid, for me to get it and have it very easy. So I don't know how many of you are building your health insurance policies. I don't know how many of you in this time thinking of, oh, do my customer are the 60 years old person? No, my customer is the 24 years old person, or is my customer a mobile generation person, which wanted to be simple, stupid for when I provide him the insurance policy that he needs for him or his family or for her and her family. The next one is to understand what really is going on. I know that in many conferences, places, we always come in and talk about this GAFA. The reality is that this kind of an inspiration for many addressing the industry. If we're seeing, for example, their in investment, how much they're investing each year compared to our industry, we are still very far looking at the investment in technology. But what does it say for the customers? If you're asking to Europeans today, almost 21% of the European are already keen to purchase a life or health or a car insurance or motor insurance, whatever. They're already keen to get it through the GAFAs. But what can we learn from that? Because that's important to know. But what is the learning that we can get from this number? So the learning is simple. If we're looking at the customer journey that the GAFA has set up for the customers, they're not thinking of, well, I'm Facebook and what I am, I'm a social media and that's it. No, they're thinking that they are Facebook and what they need is to make sure that they will bring the best solution at the right time to their customers. Because once again, they're thinking of a mobile generation customers. So when we look at that, what say the numbers about us? But it said that already more than 55% of the digital journey of customers are being managed by the GAFA. Because if you look at my graph here, what you could be seeing is that there's some people, when they want to pay something, they will be using Apple Pay. When they want to chat with someone, they will be using a chat from Apple. So you already see that how GAFA has understood that what they need to make sure for the mobile generation is, for instance, entertainment, helping them to be happy, to be healthier, helping them to pay, helping them to communicate. Do we think the same way in insurance? Do we sometimes sit and say, what can I do more than only insuring my people? Can I be working on the prevention? Can I be helping them in the payments? Can I be helping them in the entertainment phases? And this is where we will see a big switch from insurance company on risk protection only to move to a part where we are partners to our customers. And once again, sorry to repeat myself in this is definitely possible thanks to the mobile generation. So looking at insurance, very great example comes from China, where we see, for instance, in selling insurance and being connected to the customer at the right moment, is this fantastic company called Zonghai. What they have done in China is to partner with many, many different incumbents, and they have been able to offer them specific insurance policy. This is what we call today open insurance or embedded insurance, where we are able to find partners that are selling things that have nothing to do sometimes with insurance, but we're providing a little insurance policy within that. And I think that one of the elements that can help us really to shift from the place where we are this big institution offering product to a place where we are the big institution offering project exactly where the customer needed it at the moment that he needed it. And once again, using his mobile to be able to get it very easily and go further. The next one is the slide about these companies. I think some of you maybe have heard about them, some have never heard about them. But what you can see here is numbers of their customers. And to be honest with you, this slide maybe have 2 years in terms of data information. So I'm definitely sure that they have increased their customer base from 2 years ago to today. But what we're seeing is they already have 400 millions of customers, thanks to their strategy to be where the customer is, thanks to the open insurance system or embedded insurance or plug and play insurance, as anyone want to call them. The next one is, what does it take to be digital? That's a very big question that always people love to ask. And the best answer is, I can tell about this Broker in Time. So this is a company in the UK. They were building. They were a manufacturer of alarm clock. And what happened to them is that the mobile has arrived and they are not relevant anymore. So what happened in the digital world is that sometimes you might be thinking and looking at yourself as a very important institution, something that will never change and you will always be profitable in your business. But something new that has nothing to do with your business might just destroy it. And this is why we really need to think and making sure that whatever we're doing, we need to answer to the three elements that I'm sharing with you here, which is my business still relevant? Also, I am in the situation where it is urgent for me to do the transformation. And then the last one, what are the new features? What are the new resources that I can bring for my organization to stay relevant and also to answer to the urgency of transformation? So the example I can give you with an alarm clock is that imagine, because I know most of you are waking up with their phone, but imagine if your alarm clock is connected to wearables and help you to wake up at the exact right time. You know, we have cycle to wake up. So if your alarm clock is able to waking you up at the best moment for you, at the best cycle, because thanks to the pulsation that they're getting from you, you might say, well, I love this alarm clock. What's happening here is a new future, the new resources has made your business keeping being relevant rather than just being an alarm clock, which is not enough today. The same parallel will be found with an insurance organization. If you're offering health insurance, it's not enough to protect the people and that's it. You need to make sure that you're preventing, you're helping them once they get back at home when they had an injury or something like that. You need to bring specific services, opportunity for them to really feel that they're part of the win-win situation with you as an insurer. The other one is the understanding what type of people are existing. Well, there's a study that showed that there's 4 types of organization. We're talking about digital transformation. So there is obviously the fashionista, or the one that if you're looking at the 2 axes that are here, there's one axis that talk about digital capability. The other one talking about leadership capability. And what does it say is that on digital capability is everything around the technology, the investment that you're putting into the transformation. And then the leadership capability is really about what is my vision? What are the people that are part of the strategy that I want to put in place? And what you can see from this slide is that in the, what you can see in parentheses is really the rentability, the profitability, sorry, the profitability, what we can compare with other actors in the market. So I'm not going to go through each of the position here, but the one that I find so interesting and that we can learn so much from it is the conservative one. So the conservative one is it would be an organization that might not have all of the new technologies, not a big budget in terms of digital transformation, technology, research and development, but they have a strong leadership, a strong mentality to make things happen and make things differently and to keep their business very relevant, that really drive them to be able to have 9% more in profitability compared to other people in the same industry out there. What is the learning here is that transformation, change, improvement, innovation is really not only about the technology. Obviously, if you got this technology investment, that's even better. You are a digital master, you get a 26% more in terms of profitability, but at least having the right people, the right mindset already drive you to the ability of being more profitable to some of your competitors. So you really need to keep it in mind as well. The next one is looking at why this is so important in the digital. So looking at different brands, if we were to look in 2006, the key brand in market capability, in market cap, you will see that most of them and all of them already focus on non-tech companies, but only 10 years after, just on the switch, what we're seeing that is organizations like Apple, Alphabet, Amazon, Facebook has definitely arrived, and they are the best market cap. That's also, once again, the digital organization are the one that's winning the games today. So the best definition, this is Eduardo Galeano. It's a writer from Latin America, very big fan of him. And then what he's saying is talking about utopia, where he said that utopia is really a way to move forward, to walk again and again and again. It never stopped. And I think digital transformation is definitely the same. It's not like because you put something in place, that's it, that you're transformed. But no, you'd always need to go one step and one step and one step and one step further, because there's no end of digital transformation. So you just need to keep going with a lot of illusion. To understand what I'm saying today now is that there's two worlds happening for us today. There's the world where we get in touch with our client because of our claims, this kind of differences. You know that the average contact between an insurer and the injury, it's about 1.3 per year, depending the country, the market, the product. And this is a situation where we're really here to reduce the cost, the financial impact. Whether, like, if you have an insurance if you have a health insurance policy, for instance, so instead of paying 100 euros, you're going to pay maybe 20 euros in case of something happened to you. But what I believe is that thanks to technology changes, thanks to all of the way that customers needed to have interaction with us, we could move to a place where we are more here to reduce the risk, because we are 24 hours connected, wearables, 5G, and etc., that we could be finding ourselves in a situation that we're going to prevent risk. For instance, we know that in health insurance, for example, we know there's a huge impact in mental health for people. Today, so many applications that help you to reduce the mental health impact of your customers. In terms of wellness, we know that people walking more will have a better health. There's so many applications today that will help you as well to be able to improve the wellness of your customers. And I think this is where exactly we're going to move, not only protecting them, but also making sure that we're preventing. And after the prevention is claims arrive, we're also there to make sure that we help them to continue and carry on being very healthy. So their ultimate goal for me, that's the example, simple one I can give you. That will be more in like an accidental product. But let's say it's raining cat and dogs, and then you need to move from your workplace to someone to somewhere else, and then the Google told you that, well, it's raining, Emmanuel, it's raining. So, or do you want to go walking, or maybe it's better that I call a cab for you? And naturally, Google is connected to my applications, could be a Uber's, could be whatever application. And thanks to that, they will be connected and order the cab. And then they will avoid me to go to the next meeting that I have totally full of water. And that could happen as well with insurance. We know it's raining. We know that there's more risk because it's raining and the person has to move. Well, why not naturally being connected and tell him, hey, it's raining. Do you want to get this little small insurance that will protect you from the full day? That might cost you, I don't know, 50 cents. But let's imagine how many of your customers could be buying at the right time this 50-cent policy in terms of accidents because it's a raining day. I think this is the ultimate goal of insurance. It looks crazy today, but I can tell you maybe 2, 3, 5 years from now, we'll be able to see a lot more policies of this kind in the insurance industry. So here, it's to finalize my presentation. I just wanted to give you this main conclusion point where we say that we're moving from an unknown risk to a predictable reality, thanks to the connection, APIs, and so on, but also from product focus, as we had before, to the customer focus, the pay-as-you-go, the micro-insurance example that we gave just before. But also what I believe is that the digitalization of our industry, it's mainly what we're doing that, and especially for the market like your market, which is really about health insurance mainly, is that we're here to reduce the probability of loss. We're here to make sure that customers are going to be healthier, live longer, and more financially secure. And this is also the vision, the clear vision and mission of RGX. Thank you so much for listening to my presentation. I'm very happy to answer to any question. Thank you.
Thank you also, Emmanuel. It was quite interesting. And in fact, I think you were very right. I liked very much something that you said in the beginning, that it's not so much about age. It probably is more about the environment and connections. And I was thinking the way I'm communicating with my daughter, for instance. We are writing far more than directly talking in some days. I think there are some questions for you. Mihaela, do you have something?
Yes, first of all, congratulations for the presentation. One question refers if you have statistics regarding the number of insurance bought through apps.
Yeah, well, it will depend on the countries. I can tell you that as of today, in many markets, even big market like could be the Spanish market, it's still very, very not relevant. I think in Spain, we're talking, for example, in life insurance, we're talking about less than less than 1% are being sold online. But then if you're looking at some insurtech being in the market, so one of the example that could be a GetSafe, for instance, an insurtech from Germany, where they already have, and everything goes through an app. They already have close to 200,000 customers in Germany and in the UK. So which means that there's a very huge opportunities. And I know one of the issues that we see in innovation as well is that most of the time we want to, for an insurer to move forward, they want to see what the other are doing before to move. And I think this is not about looking at, are they people really buying? No, it's about setting up what you need to, putting it in place, starting to learn. And the first year, you're not going to sell, the second year neither, but the third, fourth, and fifth year, you're going to be the one selling. Because the reality is that if you want to start 5 years from now, if 5 years from now will still be 2026, so better start today than waiting 5 years to move to online sales, for instance.
Okay, thank you. You have mentioned that example with the alarm clock factory. Do you think that traditional insurance can face competition of disruptive insurers like Tesla, Facebook, or they will become irrelevant in that manner?
No, well, I don't think insurance will ever be relevant. I think it will always be relevant. The thing that is our job might change depending of how the market is moving. Maybe some insurers are going to stay only on the risk part and not facing customer anymore. So they will move to the fact that they have agents, they have brokers, and just having a specific partnership. Let's say you mentioned Tesla. It could be that I'm an auto insurer based in, I don't know, in Georgian, and then I have this agreement, and I'm just offering my risk capabilities to Tesla to offer my product. So we'll always stay relevant, but just a matter of the organization to decide, how do you want to be part of this? Do you want to be part of this by still being facing the customer, still having your brokers, your agent with you, or you want to just be focusing in the risk part and that's it? So it really depends. We will still be relevant. New actors are going to come, and that's only positive for the insurance industry. And this is what I was mentioning about the open insurance, being able to open our product services through API and connecting with other partners. But those partners are the really best example that digital sales of insurance is also a good future for, well, it's also present and a good future for us.
Okay, we have some other question for you. How do you see the future of insurance when quantum computer and artificial intelligence both together become available to the general public? What are the opportunities and challenges?
Well, I will not say, well, they're already available to general public. You know, I believe there's many wording that are trendy. You know, 10 years ago, we were talking about nanotechnology. Today, we're talking about artificial intelligence. Insurance is sitting on the edge of the innovation of technology. That's for sure. Which means that any new tech that we're going to develop will be favorable for the market, but also any knowledge that people are going to get when talking about artificial intelligence or quantum computing, that will also be available, because it will help us, I think, to challenge whatever you're building, because people will have exact numbers, better knowledge in this.
Well, Emmanuel, I think we took a lot of your time, but we have one more question.
Sure.
In the end, one of our participants says microinsurance is reducing loss probability from the customer's perspective, but is increasing speculative risks from the insurer's perspective. Could you kindly share your opinion on this puzzle?
Well, I'm not sure why we are referring here about the speculative risk of that. Microinsurance are in many markets. If you look at the African market or in Latin America, is a huge opportunity. For me, it's rather than looking at our side and what is the impact for us, we need to accommodate us and building thing that really makes a lot of sense for the customers. For some customers, it doesn't make sense for them to have a cover with just covering them, I don't know, $1 million for their life, where they just need something very specific and very small. So we need to accommodate. I'm not saying that it has to be the specific strategy for an insurance company and say, I'm just doing this and that's it. But it's to find the opportunity where microinsurance fits with what the customer needs. And us as the industry, we need to find ways. So we cannot stop ourselves in our, I'm saying the wording here about the speculative risk. I don't think we should be sitting in there. We should find a solution that will match and that will help the customer better.
Okay, thank you very much, Emmanuel. I think there are no more questions for you. Thank you very much once again. And that being said,
thank you.
Thank you. Bye. That being said, we are at the end of a very long day. It ended very interesting, as it also started. So just to go around to a full circle, I will go back to Mr. ONOPRISHVILI and ask him what would be, in his opinion, the conclusion of this very rich day. David, are you with us?
Yes.
Okay.
Thank you, Daniela. I think it really was a rich day because we touch a lot of topics which are interesting, which are currently quite hot, and we need some answers. We need what are the markets, where the market is moving, where is the technology is moving, and somehow not to miss the opportunities for our market and to our companies. It's important, and I think healthcare is a major. Our insurance business, over 40% is a health insurance. We are going to having motor insurance and in general towards them always having on mind the consumer protection and consumers' right. It's also very important, which we can achieve through current digitalization, how to sell the product. And this last presentation was really very interesting from this point of view. And we should not really stay behind of all this process. And I'm really thankful also to you organizers, to XPRIMM team, and to Sergiu, you, and all others arranging such a nice conference. This time, as I mentioned, and we all know, still online. And I'm really very sorry I cannot serve you with Georgian food and wine, but I hope it's the last time. We should admit this. And I think we are ready to continue this cooperation, and next year we are waiting for you for our fourth conference in Tbilisi, Georgia. Thank you very much.
Thank you very much, David. We will be there for sure if possible. I'm sure that all our participants, Georgian or foreigners, would be happy to be in the beautiful Tbilisi now. Till then, thank you very much all for your participation. Thank you once again to all our sponsors. You have seen them listed the entire time here on the screen next to me. But anyway, let me read their names once again. It's about the strategic partners Vienna Insurance Group and New Vision Insurance, the main partner Euroins, and also RD Insurance, SCORE, MyCE Insurance Brokers, BB Insurance, IRAO, part of VIG, GPHH, VIG, Imedil, and Global Benefits. Of course, we cannot close without thanking also FIAP and, of course, to the Insurance State Supervision Service of Georgia, our permanent partners in doing these conferences. And we really hope that we will have the occasion to really meet you in person next year and talk about at least interesting things like we had this time. See you all next year. Goodbye.
Thank you. Bye, everybody.
Thank you. Bye.
Oh, no.